Weaker than expected demand trends coming through there, and so we continue to watch what read across that will have into European names today. ASML, also something we're watching, cut to equal weight at Morgan Stanley. Also keep an eye, Guy, on Burberry, cut to underperform over at Jefferies.
Absolutely. A lot of single stock stories that we need to factor into this market this morning. Looks like we're going to see a softer start to the day. The auto sector is going to be front and center. That ASML story is going to be in the mix as well. Keep an eye on what is happening in the athleisure space after we got news from Nike and Skechers as well. What is going to be happening there? So here we go. FTSE 100 expected to be down, let's call it circa 6–7% So we should see some acceleration to the downside in the UK market, and that is what we're beginning to get. The stock 600 is out of the gate down 0.2%. The IBEX is down by 0.2%. ASML is weaker. Let's see how long it takes Germany to get going this morning. I suspect that there's a little problem with the starter motor that comes from the auto sector. What are we seeing in terms of the details, guys? Lizzie?
Well, the DAX were waiting to open, but if we break it down by sector across the stock 600, Guy, you've got all but one sector in negative territory this morning. Insurance eking out some gains higher, just over 0.1%, but bottom of the basket, tech lower, nearly a full percent this morning. Travel and leisure not far behind it. Consumer products and services not far behind that. But if we look at some of the deeper names, of course, ASML was one that Joe Easton had flagged to us, and ASML down 1.86% this morning, Anna.
Yes, absolutely. So technology, the worst performing sector, and ASML certainly has to have something to do with that. Excuse me. So certainly weakness there. To your point about things taking a while to open and the starter motor perhaps not functioning entirely normally, we don't have an opening price on the DAX, and we don't have a Mercedes share price. We also don't have an Adidas share price, and of course we're watching for both of those to respond to, well, firstly the news out of Mercedes itself, but then Adidas responding perhaps to the Nike news. So we're watching for that. Burberry, though, I can see is down by just over 4%, so that's on the back of a downgrade. ASML down on the back of a downgrade. It feels like one of those kind of Fridays.
We're really struggling to get Germany open this morning. So Volkswagen, no price. We've got Mercedes, no price. Deutsche Post, no price on the back of the FedEx story. We're watching what's happening there. Continental, no price. So it's a number of big stocks in the German market that we are keen to see getting going this morning and seeing what kind of a story is going to be coming out of them. At the moment, the German market is kind of still posting the price of yesterday, which is up 1.5%. But there's so many factors that play this morning for the German market. All of the key stock stories really that we're watching outside of ASML, maybe we could sort of put Burberry in the mix as well, are in Germany today, and they all feel like they're very much to the downside.
Yeah, it looks like we do have some opening. Do we have Mercedes opening?
I can't see it at the moment. No, I've still got it unchanged. Okay. I'm being told in my ear that we do.
But then some of the things I'm looking at on my screen don't quite look right, so I'm not going to mention them.
That's the safe option.
Yes, 20 years took me to get to that point.
Absolutely. Let's talk about what is happening with the wider economy. Earlier we caught up with Yari Stein, Chief European Economist at Goldman Sachs. This is what he had to say.
They have already been very difficult. Germany has sort of been flirting with recession now for a couple of years. One issue in which I take some comfort in is that when you look at value added in the manufacturing sector versus production, it's down much less. So in other words, German companies have managed to move into higher value production sectors and limited the effect on overall GDP and on overall value added. So
The views there of Goldman Sachs' Yari Stern talking to us about the German economy, about any signs flirting with recession. And of course, the epicenter of that today is around the auto sector, or at least that's one of them. And we do have an opening price now on Mercedes, and it is weaker, as expected, down by 7%. So the bad news keeps coming from this sector, from VW, from BMW, and the market continues to price it down.
And indeed, autos and parts, bottom of the basket now, lower 3.2%. The DAX, lower 0.6%, dragged down, of course, by Mercedes.
But this is about China. This isn't even about what's happening in Germany at the moment. This is about a Chinese consumer that maybe is opting for the Chinese product because maybe it feels that it's better. That's a judgment call, but just generally the malaise in the Chinese economy and the impact it's having. You see it in Skechers as well. That was interesting too.
You're absolutely right. It is about China, but then it takes us back to the structural issues that Germany has had for the last, that maybe the Angela Merkel government set it up with, which was the reliance on cheap Russian energy and the reliance on selling things into China, and now we see some of that coming home to roost.
And Mario Draghi really pointing the finger at Germany, and the question being really, will Germany listen to the recommendations? Christian Lindner, of course, kind of batting away Draghi's report initially, so it'd be interesting to see with this new lineup at the Commission how much the recommendations are taken on board.
Okay, let's get another perspective on all of this. Benjamin Melman joins us, Global CIO at Edmond de Rothschild Asset Management. Benjamin, thank you very much for being with us. You're with us from Paris. We have things to talk about of a French nature. We'll get to that in a moment. But as CIO, I wonder your thoughts on Germany and buying the German story at this point, given its challenges, its exposure to China, really illustrated this morning by Mercedes-Benz. The stock down by more than 7%. Well, it was down by more than 7%. Now 6.8% weaker on the back of a downgrade to expectations on China. Tell me about your expectations for German assets at this point.
It's a very good question. It's true, as you mentioned very recently, that Germany is in the middle of a crisis that is not over. Germany used to rely on cheap Russian commodities and to export to China under a US umbrella. And it's true that today the German paradigm is challenged and questioned. And we don't see yet the end of this process. And it's true that now Germany is in the middle of a downturn. So it's already quite well priced when it comes to the markets. We don't think that we have to be gloomy on German assets, but it's true that today we don't see any specific trigger as Germany is still in a very difficult situation and is still also leading fiscal austerity.
Okay, so you're not gloomy on German assets. Let's cut the story a different way. Are you gloomy on the auto sector, Benjamin?
Well, the auto sector has already repriced quite significantly. So would we sell our auto exposure today after the collapse? The answer is no. It's true that the outlook of the sector is not fantastic, but the market has repriced. So we don't have any overweight or underweight today in the auto sector. We don't see a bargain, an opportunity to step in right now. There is a lack of visibility for sure. But again, it's in the price, so we are in a wait-and-see approach in order to see when we have more information on this sector.
I wonder how much the politics in Germany and France are affecting the European investment case, Benjamin.
Sorry, I didn't hear your question. Could you repeat, please?
Just how much, we're looking ahead, of course, to the regional elections, more of them in Germany. How much is the politics affecting the European investment case right now?
Well, it's true that German politics right now is challenging. We know that the current coalition is not having some traction in the polls, is going to fall. Anyway, in Germany, there is not a big risk, as it seems that CDU should win the next election and form a coalition in a position of strength. So there is not a huge political risk in Germany, despite the rise of the populist from the far right or the far left. And in France, we know that right now we're still waiting for a government. Maybe it's going to be today. The question is not what government we will have in France, but when it falls, when it collapses, and it could take some months. So in France, the political risk would increase, but in some months, not yet. So we don't see the European political landscape as a problem right now when it comes to the market.
I'm trying to work out, Benjamin, what is driving the European market at the moment. The mood music around Europe feels very grim. The politics is difficult. The economic outlook is not clear. The ECB is not minded, it seems, to cut rates aggressively in the way that we're seeing coming through from the Fed. Yet I've got the DAX near 19,000. It's at a near record high. You talk about kind of what is happening with German assets, but let's talk more broadly about European assets. Why are European assets defying the kind of the economic story that seems to be surrounding Europe? What is driving the European asset story? Is it the soft landing potential in the United States? Is it what is happening over there rather than what is happening over here?
So there are two reasons. So it's true that France and Germany are facing difficult times right now, but it's also true that Spain, Italy, and all the southern Europe is doing far better. So the problems in Europe are not well spread. It's true that the two main pillars are suffering right now, but it's not the case for all Europe. That's the first point. So on a global overview, Europe is not doing great, but it's still okay right now despite the German problem. And it's true also that there was a lot of strength in the European export to the US. And this strength has supported European growth. The boom of European export towards the US has been massive in the recent years. The US is in a soft landing environment, but there is no recession. We don't think a recession is coming. So there is still some place in Europe to avoid a recession. It's not a great outlook. Yeah. But we clearly think that Europe is going to avoid a recession for the two main reasons we mentioned.
But why am I buying German assets? Why am I buying French assets? Why is the DAX at a record high, near record high? Why are we seeing investors buying these assets at this point in time? Do you think the current price reflects the economic backdrop that Germany is experiencing at the moment?
Well, when it comes to German or French companies, they are very international. So when you buy the DAX, you buy quite a small exposure on the German domestic economy. And it's even a smaller part of the French economy when you buy French corporate. So you are talking about global companies. You are talking about companies having a worldwide cutting edge inside their sector. And so that's why there is such a disconnection between the state of the economy in these countries and their own market. The correlation between their domestic economy and their performance is quite low.
So when do you expect we'll see a rebound of the CAC 40 and a tightening of the spread between oats and buns?
Well, the rebound of... It's true that now there is a French premium. It's true that we have seen a rise of the spread of the OAT bond, and this spread is not going to widen anytime soon. We think that this spread is here to stay, and it reflects the fact that the public finance in France are in a very bad shape indeed. And as long as there is going to be this French premium, we think that we will find some reluctance from investors to come back on the French markets. But when you look at the details of the French market, it's also about luxury. And we know that the luxury sector is having a strong impact on the CAC performance. So this sector is now in a kind of soft landing environment. It's more challenging. You have talked previously about the Chinese problem and the difficulty to export in China right now. It has an impact also in the luxury sector.
Yeah.
So maybe the CAC 40 will face some difficulty to find new stories to regain strength, but it's not a bearish environment either for the CAC 40. It's neither bullish, neither bearish.
Benjamin, just briefly, are you watching the cabinet appointments that we're expecting to hear more about over the weekend in France? Do they matter to markets, or is it really a focus on whether this government will survive?
Well, actually, it seems that the composition of the government will not have a great importance. We have already an idea about the parties which will be involved in this government. There has been a lot of information provided on that side. And as long as there is no extreme people coming from populist party inside this government, it's not really an issue to know who exactly will be minister of what. So again, we clearly think that the main question for this government is how long it is going to survive. It's still very unclear. There are a lot of threats. It could collapse quickly, but it could last for some time. So it's the real French political question will be there when the government falls.
Benjamin Melman, we'll see how long it takes. As you said, could be a while, could be next week. Benjamin Melman, the global CIO at Edmonton Rothschild Asset Management. Thank you very much indeed. Let's take a look at the core six and see what is happening in Europe in terms of the big cap stock stories this morning. As you can see, a significant amount of red on the screen. LVMH, we were just talking about what's happening in the luxury sector. It is off and off significantly. Ferrari is down by 1.33%. Is that a reflection maybe of what we're seeing with Mercedes this morning? Maybe the downgrade on ASML is certainly taking that stock down. Novo Nordisk, a spot of green on the left-hand side of your screen. Let's get the other individual stock stories that we are watching with detail this morning. In detail this morning, here's Joe.
So as expected, Guy, the auto sector is the worst performing industry in Europe today. We're seeing Mercedes coming down 8% after that profit warning yesterday, all linked to the slowdown in China, and it is hitting the other German names as well. BMW coming down 4%, extending the slump from last week, as is Continental, which was also hit, seeing losses in Stellantis as well. Guys already mentioned Ferrari, so the whole sector getting hit. Another warning, as was predicted by analysts for that sector. One stock that we didn't have on our radar was JDE Peet's. Now, a couple of things going on here. There is a story in the Financial Times around regulation of deforestation. So JDE Peet's, Kenco Coffee, they rely on countries being able to export to the EU, and there's worries about potential regulation. Also a bit of a share placing in that one, so keep an eye on JDE over in Amsterdam. Then logistics, probably not as bad as we had feared, but we are seeing declines in Deutsche Post. Of course, this coming from the FedEx read across. FedEx down 11% in the US, a big mover. So we are seeing some weakness. IDS, Royal Mail, InPost, bpost over in Belgium, all slipping as well, but not as bad as the auto space. That is really the weak one at the moment. Then we've got some deals news. Esca, this is over in France, up 12%. They've got a takeover bid coming from private equity. It is an e-commerce platform and also enterprise software. Publicis buying a company over in Michigan, around $600 million. It is in marketing in the US, expanding over there. And Grifols, meanwhile, activists building more share stakes in that company, potentially meaning more pressure on the original bidder for the firm to increase their bid. That's what analysts are saying this morning. So that one's rising over in Madrid. Publicis pretty much unchanged at the moment. There's also other share sales, just to bring you a couple catching my eye in the morning. Lottomatica, the lottery business over in Italy, an investor offloading shares following the IPO that was quite recent on that one. And take a look at poor old Doc Martens. We all love our Doc Martens, but that one getting a bit of a kicking today. If we can throw in a pun, we need a pun. Doc Martens down 14% after replacing by a big investor. And Bridgepoint, that's the one doing the deal for Esca, so raising a bit of cash, coming down 8% at the moment. Some interesting ratings moves finally. We mentioned ASML, but Morgan Stanley is also downgrading VAT. This is a peer of ASML. They're underweight this one, the same reasons. It's all about China, so it's down 3% following that move there. And then finally, Burberry, you've been touching upon the luxury names as well. So Burberry were downgraded at Jefferies, underperforming that one as well. They've also cut their price targets on LVMH across the space, all to do with the sector slowdown. Burberry today is down around 4.5%, underperform over at Jefferies.
Thanks, Joe. Yeah, really interesting that there seems to be many legs to the China concern, whether that's around chips or autos. It's having an impact in various places. Joe Easton from our equities team with an update there. Guy, we've got Governor Ueda still speaking.
Yep.
The yen seems to have calmed down a little from its morning excitement.
Maybe he's moderating some of his comments earlier on the kind of the more calm approach that he's taking to inflation. He is saying the latest inflation data a little stronger than expected. So that maybe is a factor for the yen after we've seen him maybe taking the yen off the boil a little bit earlier on, keeping a firm eye on consumer spending.
Yeah, look, such a whiplash from the July commentary that, of course, spooked the market. But, you know, Mark Cudmore saying that this is a dovish, cautious note today. There's really been no ground setting for an October rate hike, possibly because of that caution around the politics in the US and Japan. But he really has been batting away the questions about politics when they have come up through this press conference. They're keeping an eye on it. If you want to keep on track of that press conference on the T-Live blog, I do recommend it. But right here, we're going to be talking about the car makers. Mercedes cutting its financial forecast for the year. We'll bring you a deep dive into the troubled German auto sector next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome back to the opening trade. We're 22 minutes into the cash session here in Europe. Autos at the bottom of the Stock 600 basket, down 3.3%, dragged down by Mercedes. They're at 7.4%, and that is weighing on the German index this morning. The DAX lower 0.7%. So we can dig into why. Of course, we had Mercedes cutting its financial forecast for the year. But for the details, we're joined now by Bloomberg's Elizabeth Berman. She's in Munich. And Elizabeth, just tell us, what is the trouble here for Mercedes, and how much trouble is the China story going to affect all of the German auto powerhouse?
Yeah, for the German auto powerhouses, VW, Mercedes and BMW, alongside quite a few of the suppliers, of course, such as Continental, this is really bad news. I mean, we've watched for many months now the crisis in China unfolding, and as that carries on, it is now reaching consumers in greater numbers than those car makers expected. Just last week, we had BMW also cut its guidance. There was a bit of a recall issue there as well, but the bulk of that guidance cut was also made up due to worries about where the China business was headed. In Mercedes' case, it's even a bit more worrying because they rely on sales of their S-Class and Maybachs in China a lot for the margins that they have in mind. That's not working out for the time being, and that sort of undermines, to a degree, the CEO's strategy of moving more sales into that very top end where you've got the G-Wagon, the S-Class and the Maybach. We've had for some years now supply chain issues, and those have gone away. And with that, and now with China on top of it, we're seeing returns really wither away.
Yes, so today's news is very much about sales in China then, Elizabeth. But Chinese automakers also trying to sell cars into Europe, and that's causing tension closer to home. What is the latest on the tariff talks that are taking place between China and the EU? We know that they are ongoing, and the fact that they are ongoing and not settled seems to have added some optimism to things from the Chinese perspective.
Yeah, there's been a flurry of meetings led by the Chinese Commerce Minister. He was meeting with car makers and suppliers in Brussels this week. Then he met also with the EU's Trade Commissioner. He also visited a range of countries to garner support for changes to the planned tariffs. The EU is supposed to vote on them next week. This was scheduled for September 25. We understand there might be some slippage. And the latest indications were that both sides remain very ready to talk. But that is nice and sort of positive, but we haven't really seen any concrete ideas around what such constructive measures could be. Both sides are, of course, pretty interdependent. Like we were just saying, the German car makers sell a load of cars there. And at the same time, the Chinese want to push into Europe. So if the tariffs do get in, we are set to see some retaliatory measures from China for sure. They've already outlined that across a few sectors.
I do wonder how long it'll be before Europe needs to start talking about supporting its car sector, maybe with some financial help. Maybe tariffs won't be enough. Elizabeth Berman in Munich on what is happening with the German auto story this morning. Thank you very much indeed. European markets certainly feeling the pressure coming out of that sector this morning, having a big impact, as you can see on the numbers on the screen in front of you. We are seeing the DAX underperforming. We're going to talk about German elections, regional elections next. Brandenburg going to the polls this weekend. Is this basically the last gasp for Olaf Scholz? If he doesn't do well, if the AfD do well this weekend, what is his future looking like? We'll ask that question next to Judy Dempsey. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before. and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Welcome back, everybody. This is the opening trade, 30 minutes into our trading session, and it is a negative one, certainly over in Germany. The DAX down by 0.8% this morning. That has a lot to do with the auto sector. We'll continue to monitor that for you. Let's talk about other things on the move, though, in Germany. There you can see the weakness of the German market. Bloomberg has learned that the German government has started an internal probe into its own handling of the Commerzbank share sale. This after the transaction allowed UniCredit to take a major stake in the lender. Let's get more from Bloomberg's Jenny Serrain, who's following the story, of course, for us. So what exactly are they trying to achieve from this probe? Because we saw UniCredit go and buy around 4.5%, I think it was, in the market, and then they got another similar amount from the German government, given the 9% or so in Commerzbank. So what is being investigated here?
So the government is really looking into kind of how this was allowed to happen. We've reported a lot that the government felt it was wrong-footed in this. And so they're really just trying to understand kind of the mechanics of how the sale went down. And I think also really try to figure out a path forward for what could come next for Commerzbank.
Because even the UniCredit CEOs told Bloomberg, told our colleague Francine that, they thought they'd notified the German government.
Yeah, so I think that's
or at least they weren't in the dark.
That's what I think they're trying to get to the bottom of, essentially, is kind of the exact, tick-tock of how this all took place and really understand kind of who made, what moves and at what timing.
Yeah, so what other banks and Wall Street players could get dragged into this investigation?
I think it'll be interesting because, it's obviously you've got the two, principal players in terms of UniCredit and Ortel, and then you also have Commerzbank, you have the government, but there's a lot of different, banks and Wall Street folks that actually pull off these sales. And so the actual mechanics of it, involves a lot of different players. And so I think they'll be looking at, every single piece of this puzzle to really try to put together exactly what happened.
We spent our morning talking about the auto sector and the troubles that exist within it, and that takes us to the wider German economy and what is happening there and the trouble that Germany is experiencing, Germany AG is kind of experiencing. Does the trouble that the German economy is experiencing kind of writ large make it more or less likely that Ortel succeeds in taking over Commerzbank? Kind of, are they feeling defensive? or does the German government need the money? I'm just kind of wondering how the bigger picture impacts the bottom-up story surrounding Commerzbank.
Yeah, I mean, I'm sure that's actually a huge reason why this investigation has even been started. You know, this is a national champion for Germany in terms of Commerzbank, one of the biggest banks in Germany. And so it's a really important player, and I'm sure the government has a lot of questions about what it would look like for that to fall into foreign hands. But at the same time, you know, UniCredit is considered one of the better-run banks in Europe, and it has some of the best returns. And so I think there's a lot of, you know, probably pushes and pulls in terms of whether or not the government would really want this to happen.
Jenny, great stuff. Thank you very much indeed. Jenny Serrano updating us on what is happening with Commerzbank. Who knew what when? We'll find out. The Germans are going to the polls again this weekend. The state elections continue. This time it is the turn of Brandenburg, voting Sunday in regional elections. Now, Brandenburg has been governed by the Social Democrats since 1990, but the far-right AfD is making gains. Certainly that's what the polling suggests going into this. Let's talk about the impact of those gains and what it could mean going forward, particularly for Olaf Scholz. Judy Dempsey, Senior Fellow at the Carnegie Endowment for International Peace, joins us now. Judy, great to speak with you. If the AfD do well this weekend, is Olaf Scholz's party going to look at somebody else to take it into the next general election? How quickly could he be out on his ear?
Well, good morning, guys. So much depends actually on the kind of narrowness, or indeed this, if the SPD can actually win in Brandenburg against the AfD. It is so close to call at the moment, but the opinion polls so far have been correct. The problem is that Chancellor Olaf Scholz is actually very weak at the moment in terms of the opinion polls, trailing so many points behind the opposition Christian Democrats. He himself has said he's prepared to run again as Chancellor. Federal elections are due next year. But we'll have to see what happens on Sunday. And so much depends now on the Premier of Brandenburg, Dieter Woidke, who's done quite a good job. He's quite popular in Brandenburg, but nevertheless, because of the unpopularity of the coalition here in Berlin, the AfD, for many reasons, is surging ahead. As I say, it's neck and neck at the moment.
Is this a Scholz popularity contest? Is that what happens this weekend? Or are there other issues at play here?
It's certainly a kind of Scholz popularity context. Indeed, some of the SPD people to whom I spoke in Brandenburg didn't want Scholz to come up and campaign because he is so unpopular. This is the first thing. Secondly, really the migration issue, the refugee issue, the asylum issue plays huge into the AfD and indeed the people of Brandenburg generally. And so this is a big issue. And then there's the EU issue, there's the American issue, there's the anti-Ukraine issue. And these are all issues that the AfD have been actually playing very hard on. And so they've got the SPD on the hop. And so Scholz, and particularly the Premier of Brandenburg, has to fight very, very hard to cling on to power, which they have held, as you mentioned, since 1990, German reunification.
Judy, good morning. What can you tell us about the role of the BSW party here, the far left party? And I'm wondering here in particular about the extent to which they are, or maybe I should just say she, because it's a very new party formed around one person essentially, whether they are going after the same audience to some degree as the AfD, because, okay, one is far left and one is far right, but there does seem to be some overlap, certainly in policy around immigration and around Ukraine.
Indeed, it's a great question. Sarah Wagenknecht, she's quite a skilled politician, and she was in the old Left Party before she left it. That old party was dissolved, and she has really organised an incredible campaign over the past several months, doing very well in the last two recent elections in Saxony and Thuringia. Now, she actually is far left, anti the war in Ukraine, a bit of anti-Americanism, but somehow, even though she is far left, she may actually attract some votes actually from the Social Democrats and indeed maybe from the AfD. At the moment, she's running very high in the polls, about 14%, which is quite phenomenal. So she could be a kind of kingmaker, depending on the outcome of the Sunday elections. In other words, she could split the vote and rob votes from the AfD and from the SPD. It's going to be very interesting, this kind of vote on Sunday.
Yes, Judy, to go back to Guy's original question, is there any kind of result here that might trigger some real movement in Scholz's position in terms of his role in the party, his role in the coalition? You know, are we talking about something that significant from this one state election, although it comes on the back of two other state elections, which were obviously very disappointing for his party?
Logically, it should be a moment for Scholz to decide his future and the future of the coalition. But logic doesn't really determine the outcome of this coalition in Berlin. The problem with the coalition is that if they went to the polls now, they would be decimated, and also it's very difficult to actually call a very early general election. This is the first thing. And secondly, Scholz is quite a stubborn politician, and he doesn't want to actually cede authority at the moment. He's willing to hang on for as long as possible, but he's going to need some major positive results to actually make a difference, to show leadership. He's got saddled with so many problems, just not the fragmentation of German politics, the economic problems, the Volkswagen issue, the Commerzbank issue, the whole structure of the German economy. And somehow he's not delivering on any of these things. If he did, I think it might make a little difference for his standing in the polls.
Yeah, they're the challenges. What about the solutions? How can the centrists stabilise German politics? How do they win the core voters back? Is it tougher migration policy, for example? Is that the answer?
Well, their answer to the migration policy is close the borders. I was travelling in Poland last week, and we were warned by the German railways system to actually have our passports ready because they're introducing controls. Remember, Germany borders with at least 7 countries, and that's a lot of personnel to actually close the borders. But if you actually do these checks out of security reasons, what happens then to the whole kind of EU freedom of movement? What happens to the fabric of the Schengen Accord, which allows free movement across the borders? So Germany is pivotal here on the future of the EU, in some ways for Schengen, but also in terms of how it sells itself inside the EU. So there's an awful lot of stake here, but migration is the key issue, but closing the borders is not actually the solution that's going to stem these flows.
Judy, the German auto sector is in crisis. How does that change German politics? How does it change the German economy? How does it change Germany's approach moving forward from here? This is at the heart of the German economy, and bad things are happening. Mercedes is down hard today. BMW is having a tough time. Volkswagen's having a tough time. How does Germany deal with this, and how seriously is it being perceived in Berlin? How seriously is Berlin taking this story?
It's big news here. Very, very big news. The crisis in the car industry really is the crisis of industrialization in Germany. And Germany has been very, very slow to deindustrialize, very, very slow to digitalize, very, very slow to recognize the big threats, the big challenges of actually installing as quickly as possible electric cars. It's been incredibly slow. And I think one of the main reasons is the whole connection between politics and the industry here. It's very, very close. And when a company like a big car industry is in trouble, well, the answer, subsidies are put off the fatal day when they'll have to really size down and move forward. It's such a major issue now because this is the backbone of the German economy, but it's a backbone that actually is getting broken day by day.
Yeah, on that competitiveness theme, Judy, you touched on the relationship between Germany and the rest of Europe. I wonder if Germany's fundamentally misunderstanding the point of Draghi's report and how it relates to the European Commission. If you think that the domestic politics in Germany are going to continue to weigh on Ursula von der Leyen's ambitions to drive competitiveness in the EU.
This issue of competitiveness is so important because competitiveness actually relies on innovation. And of course, von der Leyen has mentioned innovation quite a lot in the past couple of days. As for the Draghi report, I mean, it's clear that Draghi is calling for much more fiscal union, much tighter economic union, monetary union, much tighter integration. And actually, Chancellor Scholz isn't buying into this, nor indeed is the opposition leader, Friedrich Merz, who hopes to be the next Chancellor of Germany. He's not buying into this either. So you wonder what Germany is buying into in terms of making the European Union more competitive. Holding on to old industry is certainly not the answer, and actually bailing out industry with more subsidies and taxpayers' money isn't the answer either. It really is embracing new technology, which would actually give the German economy a spur. But I cannot see this happening at the moment, and nor can I see Germany embracing von der Leyen's moves for more innovation, or indeed Draghi's report for more fiscal monetary union.
Julie, thank you very much. Julie Dempsey, Senior Fellow at Carnegie Endowment for International Peace. Thank you for joining us. Talking there about the German economy, the role of Germany within Europe as well, crucial. And this takes us back to a conversation we were having yesterday with Jens Larsen from Eurasia Group. We talked about the fiscal picture across Europe, and we were trying to get a sense of if there's objections to immigration by various electorates or parts of electorates within Europe, and if birth rates are low and you still want growth, you're going to need productivity. Can you invest to get that productivity? This is what he told us.
It has fiscal space. I think the fiscal issues we are seeing in Germany is almost entirely a function of their own self-imposed rules. There is room in Europe to raise investment. I think it's absolutely critical. The same is true in the UK. I don't think the market would bat an eyelid if the government turns up and says we want to raise borrowing in order to raise investment, because that does generate growth, and ultimately that's what you need.
Jens Larsen, speaking to us earlier this week, and he was talking there about the overall European picture, the German picture. He says they've got room to borrow. He's talking about the UK, saying they have room to borrow. It's interesting whether we see that it's remotely on the agenda, given our quite recent Liz Truss-induced market meltdown moment, which we remember all too well, and perhaps they remember all too well at number 11 as well. Interestingly, I spoke to a business leader yesterday who was talking about actually they think it's more about just policy certainty that will help the UK economy. But you're going to be heading to the Labour Party conference, Liz.
I am indeed. I'm off to Liverpool, and what business I think really wants is detail, because Labour managed to get through the election without giving away much detail because of that poll lead and the momentum just gathering behind them. Now this is an opportunity to give some, so that business can invest, so that they can achieve that top goal that they say is
Doesn't that need to come with a positive message, though?
Yeah.
And that's the concern at the moment, that there is no detail and the message is quite downbeat.
And arguably too downbeat when you look at the economic data. You've got inflation again at 2.2%. The BOE doesn't feel the need to go for a half-point cut when you look at the growth story. But yeah, you've got those consumer confidence figures from GfK this morning. Perhaps if we look at their explanation for it, it's because of the gloom from Keir Starmer.
Something's putting people off buying sofas, it would appear, couches for the American audience. Really interesting. And the timing of the various set-piece events in the UK schedule in the next month and a half is really interesting, because we end with the budget. But before that, we've got an international investment summit. So you're going to talk to the international community, try and encourage investors to come to the UK to spend money, to invest, but they won't have certainty around various tax rates, I assume, unless we get some of that information a little ahead of time.
But what you do have is a message of, it's really bad. Got a big hole. We're going to have to raise taxes. It's going to be really painful. Is that the message you want to convey to an international audience, which is thinking about investing in the UK?
Yeah, and you talk about the agenda over the next kind of couple of months. Look at the agenda for Labour Party conference. Keir Starmer's jetting off to Ungar. He's going to New York. Surely that speaks to the fact that the domestic picture has been, perhaps of his own making, more difficult than the international agenda that he is going to go and deal with instead. It's going to suck
easier
the
to
life
manage,
out of
maybe.
this.
Easier to manage. I don't know. It feels to your point, maybe that investment summit should have come after the budget.
Yes,
that would be logical.
And maybe the message will have to change ahead of that investor summit, because you don't want that domestically. The message that was supposed to resonate domestically and blame the Tories for the things that the Labour Party inherited. That was the intention of that message. Maybe that's done, and now in terms of messaging, maybe they need to move on to something else
and
that
what a change of
attracts
tone.
international investors.
When you sat down with Johnny Reynolds, the business secretary here for our business debate, it was after, they'd been wooing the city, the smoked salmon and scrambled eggs offensive. It was all such a different mood. And the last Labour Party conference, such a different mood to the doom and gloom now.
Starting to show up in the data. Is it going to start showing? The consumer's feeling it. Are we going to see it showing up in the investment story? I think that's I think that's what we need to wait and see whether or not that shows up. Smoked salmon and scrambled eggs. Never been a fan of that combination anyway. Smoke sound gets warm. Let's talk about Hugo Boss. I need to bring you at the end of this show, I feel, some positive news out of Germany. And I find it here in Hugo Boss. The stock is up by 2.64. We've been trying to figure out exactly what is happening here. It feels like insiders are buying. Seems to be the reason maybe for that story. So I feel we should end on a positive note rather than going with the Labour Party strategy of sounding rather downbeat. So it's the end of the week. I feel we should finish on a positive note. That wraps things up for this programme. Not quite yet. We're not quite there yet. We've still got a few other things that we need to be talking about. I'm going to get ahead of myself. Talking about finishing on a positive note. We'll be back in a moment. We need to still digest what is happening out in Japan as well. We'll talk more about that in a moment too. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
a.m. here in London, but let's go to the Middle East now, where it's reported that Israel has launched fresh airstrikes on targets in southern Lebanon. Meanwhile, the Secretary General of Hezbollah has said that the mass explosions of telecom devices in Lebanon was a, quote, huge security and humanitarian blow.
This will be confronted with a severe reckoning and a just retribution in expected and unexpected ways. But because this new battle involved hidden hands, let me change my approach. I will not talk about a time, a form, a place, or a date. Leave the subject, and the news will be what you see, not what you hear.
So let's bring in Jumana Basecci, our Horizons Middle East and Africa anchor. Jumana, I ask you every day, But we ask again, how likely does an all-out war between Israel and Hezbollah look now?
Well, things have escalated even further in the last 24 hours. Yesterday was the first opportunity the world had to listen to what Hassan Nasrallah had to say after those waves of explosions rocked Lebanon Tuesday and Wednesday of this week. The Lebanese Health Ministry putting the number of deaths now at 37, with more than 2,800 people injured. And Nasrallah blamed Israel for the attacks this week, saying they had crossed all red lines, but also conceded that it was a huge security and humanitarian blow. But then he also said these attacks were not going to deter Israel from firing on Israel, and the only way, Hezbollah from firing on Israel, and the only way they would halt attacks is to stop the aggression on the people of Gaza and the West Bank. So the language was pretty defiant still from Nasrallah, but as ever in these speeches, he didn't give a lot of detail as to what that retaliation would look like. Now, on the other side, earlier this week, we had heard from the Israeli Defense Minister Yoav Gallant, who said that they are now entering into a new phase of the war. They're redeploying more military to the north of the border. And we saw an intensification of airstrikes onto South Lebanon over the course of the evening, with more than 100 rocket launcher targets being struck over the last 12 hours. And that does tell you that this indeed has marked yet another point of escalation in what has been quite an eventful week in that part of the world.
Jemana, how should we think about life developing in Lebanon for the population there? I'm now seeing airlines saying you can't bring mobile phones onto our planes, you can't bring walkie-talkies onto our planes. How different is life in Lebanon as a result of what has happened this week? How tense is the country?
It's hugely different, Guy. Everybody in the country is extremely scared. There's this feeling of paranoia. People don't trust their smartphones. Anecdotally, you hear of young children, 12, 13-year-old children, messaging people saying, don't use your don't use your mobile phones, take your smartphone watches off, because there's an absence of trust in the telecommunication devices that operates within the country. And so, yes, there's this high sense of fear that what is going to happen from here onwards could lead to further escalation, and that potentially Israel could be preparing for a larger offensive into the country. And I've got to say here that it seems as though the diplomatic angles have not been working. This is backed up by our own reporting at Bloomberg, with many Israeli officials saying that the diplomacy angle hasn't worked, and therefore they have no option but to start redeploying more forces to the northern part of the country to ensure that security is restored. But how that is going to happen, of course, is the million-dollar question here. What we do know is the international community, the likes of U.S. Secretary of State Antony Blinken, even President Macron weighing into the debate yesterday, saying all sides need to step away from the brink. Macron saying war is not inevitable. Nothing, no regional adventure, no private interest, no loyalty to any cause merits triggering a conflict in Lebanon. So at this point, despite the talk from the international community, it doesn't appear to be the case that either Hezbollah or Israeli military want to step down.
Jemana, thank you very much indeed for the update. We greatly appreciate it. Jemana Besechi joining us out of Dubai. We're wrapping up this week. Busy week ahead, though.
Yes, absolutely. If we pivot our attention to what comes next on the sort of global stage politically, we've already talked about the elections that are taking place on Sunday in one state in Germany, in Brandenburg. It's an important state, has symbolism certainly for the SPD and for Schulz himself. And we were talking to Judy Dempsey earlier, who was saying this could be something of a personal verdict. He's trying to fight off the AfD. The AfD could be dented by this new left-wing party, the BSW. So there's a lot of moving parts in the German story, and we'll see how it all plays out for the ruling coalition.
Yeah,
Liz is going up north.
I am back where I belong. To Liverpool for Labour Party conference. I'll hope to get a bit of detail out of Johnny Reynolds, the business secretary. I'll be speaking to him on Tuesday for a fireside chat, but really taking the temperature in the room of business, whether things have changed for them now that Labour's actually in power.
Got some inflation data coming up out of the States. We're going to be watching that very carefully. I suspect we're going to see a flood of Fed speak next week as well.
Although we've moved, haven't we, from this sort of inflation obsession to now the labour market obsession, I thought.
Yeah, maybe. Or is there now this danger that the cuts sort of start to refocus our attention on that inflation data reignite the US economy. We should probably leave, not with Hugo Boss. We can finish the show now. It's okay now. We've got there. But with what is happening with the autos. The autos are having a really tough day in Germany. And we continue to see this story developing. Today it's Mercedes. That's what we're watching so carefully at the moment. But that is the real story out of Europe this morning. Quite a significant amount of weakness in that space, as you can see. Mercedes leading the charge lower. The Pulse is next. Have a great weekend. This has been...
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
The stock rally pauses in Europe as euphoria ebbs over the jumbo Fed cut. Meanwhile, the yen erases gains as the BOJ signals no rush to hike. Nike actually replaces its chief executive with a company veteran in a bid to return the struggling brand to its glory days. Plus, Mercedes plunges after slamming the brakes on its outlook, blaming poor sales in China and the latest sign of trouble for German automakers. So, welcome. It's Friday, so happy Friday. TGIF, it's been a long week, certainly if you're a bond trader or even an equity trader. This is the markets overall in Europe. Now, we're seeing, again, a little bit of positioning maybe after a pretty big week in terms of central banks. BOJ today saying, of course, that rates are unchanged, but they're very much in focus because they're indicating now a path towards tightening as inflation accelerates. So the yen fluctuating a little bit. Here in Europe, you can see the CAC 40 and the FTSE down 0.5%, the DAX down 0.8%. Now, I would suggest the most interesting story is what's been happening with the yields, of course, in the U.S., 10-year 3.711. S&P futures practically unchanged, down a touch, and then you can see yen 143.68. We'll also look at gold. Now, there have been a number of chief executives this week that have left. Nike has ousted the chief executive, John Donahoe, and is bringing a longtime executive, Elliott Hill, out of retirement as it tries to return the struggling brand to its glory days. Now, Hill joined Nike in 1988 and served as president of Consumer and Marketplace before he retired in 2020. Nike slashed its revenue forecast in December, losing ground to competitors. And we don't have a pre-market, or we do have a pre-market. You can see 12 that's FedEx. We'll get to FedEx in a second because it says that business would slow in the year ahead. If we have Nike, as soon as we have the pre-market, I'll actually bring you Nike as well. So we have huge conversations. Nike, I'm told, is up 6% in pre-market. So we'll have a look at what this means for the indication and where they go next. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone. Happy Friday. Welcome to The Pulse. I'm Francine Lacqua here in London. Now, European stocks a little bit lower after a record close on Wall Street yesterday. Again, jobs data reinforcing expectations of a soft landing for the U.S. economy. Well, joining us now, Beata Manthi, head of European equity strategy at Citi Global Markets, and Bloomberg's Paul Dobson. So thank you, Paul. Thank you, Beata, as always, for joining us. It's been a big week. I mean, we survived it just about. I don't know what your trading floor would say.
One more day to go.
One more day to go. But actually, you know, the Fed managed to do this cut, but also not giving the market reason to panic, which I have to say was quite equilibrated.
Absolutely. So it was quite an encouraging message, right? We were told cuts will continue, but actually all signs from the economic activity point to soft landing. So that's, of course, that was a hooray in the market yesterday. But what we argue is, yes, that's great. That's definitely a positive catalyst. But I just worry there are quite a few other reasons to worry, and the balance of risks is not completely yet pushed towards the positive.
Yeah, Paul, is that how you view it too? When you look at some of the concerns or some of the market chatter, are we too quick to take the inflation threat off the table? And is the Fed actually trying to get ahead of the curve because they were behind the curve?
We do have all of those concerns playing away in the background there, Francine. Yesterday, of course, we had a really strong day right across the board. Everybody was feeling very optimistic and happy about the Fed decision, but there are still those lingering doubts as well. I think today is going to be a bit of an anomaly. We have big options expiries, and that's going to shake things up a little bit. Plus, maybe there's some profit taking going on as well. So hard to get that clean read immediately, but it's true that the Fed is, and what it's going to do next is still relatively inconclusive. So none of the major banks seem to be able to agree. Are we going to see 25, another 50 and 25, more aggressive cuts? Is inflation, like you say, going to come back? All of those doubts and concerns are playing in. What we do see from the bond yield curve is some steepening there. So lower short-term yields, higher longer-term yields, and that does suggest potentially a little bit of inflation concern. But the market has not gone crazy or wildly out of control. And like you say, it does seem like the Fed was able to more or less pull things off without causing too much volatility.
There you go. I like that, more or less actually pull things up. Beata, when you look at the balance of risks, I mean, I guess you put China in something that, big question mark. What else do you have worries about?
So China definitely has put a huge pressure on European stocks, especially European stocks with big revenue exposure, right? We find that they actually, just like last year, they've been a better way of playing China exposure. They outperformed the benchmark, outperformed China. This year, they not only did they underperform the benchmark, they underperformed China, which is down as well. So big pressures there. But of course, we can go on. Manufacturing, PMIs rolling over in Europe, pressures to growth, services holding up, right? So this is holding up the GDP growth at the current level. But of course, we also watch very carefully the dynamics of the labor market in the US. So yes, the Fed told us that for now the economic outlook looks okay and stable, but of course we do see these weakening underlying trends in the labor market.
And Beata, do you worry about a lot more softness than we're actually seeing coming through? So is there a danger that we talk about a soft landing, and a soft landing can be can mean this or this, but actually that it could go wrong at any moment in terms of labor market, because especially the bottom 20% are really struggling.
Absolutely. There is a stickiness in labor market. When it turns, it continues, right? The question is to which level we are going to get. Our economists out of the US are more bearish on the outlook. This is why we have, of course, if indeed that happens, it comes with a silver lining of more cuts from the Fed than the market anticipates. And at the end of the day, nothing points out to a deep recession, right? So that's positive. But what I really worry about is all these downgrades. And while cyclical markets like Europe have been seeing huge downgrades to the EPS since really June. Beforehand, we've been seeing upgrades. The market was outperforming. Cyclicals were doing well. And then everything turned through many catalysts that before were positive, they turned into headwinds.
So, Paul, I mean, a couple of other things we're watching. So China is, thinking about removing some of the major home buying curbs. Again, this kind of goes to the fact that they're just really worried about that sector. So I don't know how that's playing out in the markets. And then we had the BOJ.
Yeah, well, we don't have a great deal of positivity coming through in China's markets. Even with those moves today, there were some gains for the property developers, at least. But, it's all incremental steps. It's all, supportive, yes, but not that big bang thing that's really going to cause a big turnaround for the economy. And nor does it seem like policymakers particularly want to deliver that. And I think the market has kind of gotten used to that by now. So, yes, we kind of continue with that sort of growth in the 5% area there or thereabouts with extra stimulus like these property measures where needed to help things along for now. Now, that is pretty significant because people can now, in theory, if this all happens, buy more easily in the biggest cities in Beijing and Shanghai, and that will make a difference there. But again, not so much right at this moment in time that it's going to have the entire market jumping for joy.
So, what's the right way to actually navigate some of this China weakness through European equities or other equities?
So our biggest worry about what will happen out of China going forward is we won't see a big stimulus to stimulate consumer demand, right, and stabilization in this negative sentiment. So consumer stocks still could see some pressure, or at least the stocks with the exposure to China. We've been polling the analysts that cover these stocks. Do you see any? Would you be buying the weakness in any of these stocks? And the only ones that told us there are some positive signs or the market went down too much, overreacted to the downside, is tech sector. And just about, if you need to push it to get some green shoots, is the metals and mining sector. So inventories of iron ore in China at historical record lows.
Beth, just quickly, when you look at the price of oil, I mean, it's almost a free stimulus, though, right, for the world economy. So that's one thing that's going the right way.
Absolutely. So again, always about the balance of risks, right? There are some positives, and of course, if the dollar continues to weaken, that would be positive for the outside world. Then we are heading into the elections in the US. We think on margin, if Harris wins, that would be on margin positive in relative sense for the outside world, right? So it's not all lost. But what really worries me the most is that the downgrades we've been seeing are only going to accelerate into the reporting season. And we run this proprietary earnings revision indices, and the European index as of last Monday, this Monday, hit almost -40. It really hardly ever happens, right? So it's almost a record extreme number. Yeah. And what it tells us is you have very high likelihood of downgrades to continue and EPS being cut, right? So that's the bad news.
That's very interesting. So we'll talk a little bit more about that, and especially maybe focusing on the retail sector. Beth Amanthi, thank you so much. And thank you also to Paul Dobson, Bloomberg's executive editor for Asia Markets. Paul, you can actually have a break now. It's Friday evening after a big week for you and the team. Coming up, at Nike jumps pre-market as it brings a company veteran out of retirement to try and return the brand to its former glory. We'll bring you the story next, and this is Bloomberg.
Bloomberg News
Bringing
Now.
together enough talent in one organization is really hard to do. And if you're working on a problem that, may be modestly successful, it's kind of easy to get the first few people to join. You can give them a lot of equity. But then it gets really hard. Why is employee 20 going to join? Why does this matter to the world? Why should someone work on your startup versus any of the other things they could do? And picking something that matters if you're successful is a great way to do that. And so I think it's really important to think about when you're starting the company, how is this going to evolve into a vision that a lot of people want to help with, that a lot of people want to be associated with? Because I think getting talent and getting mind share is really hard in the current environment, and people are interested in startups that matter. Another thing that we've noticed among our best founders again and again and again is that they have a confident and definite view of the future. They may be wrong, and so we say it's good to be confident and flexible, but this idea that you are confident and definite, this is what I think is going to happen, or this is what is going to happen, and being relatively sure of that, having courage of your convictions, being a clear leader, saying we're going to do this, and that's why, even in the face of a lot of doubt, that seems to really correlate with success. And this comes back to having an ambitious vision, but the entire startup ecosystem is best set up to support companies that have a low chance of success, but are huge if they work. And I think going for something that is huge if it works will attract the best people. I'm not going to talk too much about the team. There are a lot of obvious things I could say that have been said many times by many people about, you need smart people who want to work really hard and who communicate well. These are all really true. But I'd like to mention a few non-obvious things that we've noticed that we don't hear people say as much about the team you need to assemble. Vinod Khosla says that the team you build is the company you build, and I really think that's true. I've still met only a handful of founders, I think, that spend enough time on recruiting, like Mark Zuckerberg is famously one of them. But building a great team, I think, other than picking the right market and building a great product, is the most important thing you do. All founders go through a transition, all successful founders, where you switch from building a product to building a company, and building a company really is about the team. So you need optimists. The whole world will be telling you why you're going to fail as a startup. If you don't have that internal fire of belief, if you don't have people who say, you know what, we are going to do this, and it doesn't matter what the haters say, we're going to figure this out, and there is, this problem, it must be solvable. If you don't have the spirit of optimism on the team, it's very hard to succeed when the world continues to punch you in the face. You need at least some idea generators. There are a handful of people in any company that has gone on to be really successful that I've been able to work with, who are just really good at coming up with lots of ideas. You don't want too many of these people because that's more ideas than a company can follow through on. But having some people within a company that are just constantly throwing out new ideas, most of which will be bad, turns out to be super important to have on the team.
In August, but then Catherine Mann is also saying there's growing evidence of consumer weakness.
Yeah, so this is a really interesting story in the UK. I think coming into the year, we were talking about strong real income growth, how the consumer would drive a recovery in the economy. And consumption it's been okay, but actually against the backdrop of how strong wages have been, consumers continue to save more. And this is the story that Catherine Mann's telling us, is there's been this sort of structural shift in the psyche of consumers, because we've had all these shocks to the economy, all the economies around the globe. And is it the case that there is this shift in preference, that people just want more money in their bank to be sure of that rainy day fund? It's when it hits, they have the money there. So I think the story for the UK and the UK consumer is there's probably going to be consumers are going to be the main driver of the economy. They're the biggest bit of the economy. But it's consistent with the first couple of quarters of the year where we had very strong growth, that being a one-off, and then moving into the second half of the year, you probably moved down to, I would say, trend rates of growth, so 0.3%, 0.4% a quarter. So I think that's all consistent. Of course, the thing on the horizon that's worrying people, and we've seen from the consumer confidence data, is the budget. And that's the sort of curveball that we're going to get on October the 30th. But I think bigger picture, and if you look at sort of underlying trends, consumers look in a pretty decent place, and it's really on them as to how much they're going to sort of put their hand in their pocket and spend.
Beata, this goes to some of the surveys that you had about some of the companies' earnings per share having to go weaker. I don't know where retail sits in this, because the luxury companies were doing extremely well, and now there's a lot more concern about some of them. So I don't know if it's company specific, again, because you don't have the right product, or whether there's just going to be a shift downwards for all retail.
Absolutely. So if you had an assumption at the start of the year, if you knew consumer would be weak, you would probably be bearish on the retail sector in Europe, but actually it has been doing quite well. So the more on the upper side, the luxury goods, which of course the exposure to China has been a big drag there on the performance and on the EPS, have underperformed. Retail has held up okay, so it's really this fast fashion. Yes, consumer confidence is weak, but it's not very bad, right? We are not in a recession. There are these savings. And the consumer is spending, but just on cheaper goods, where retail sector actually falls into.
Yeah, I mean, it's interesting for the UK because some of the surveys basically point, and we've talked about this on the program, is that actually the new government has been talking down the economy, and so it's maybe not a signal of further weakness, as you say. It's just people saying, well, let me see what's in the budget, let me see what happens over the next couple of months before I buy that new purchase.
Yeah, exactly, and it's the point Andy Haldane's made quite publicly, that Rachel Reeves shouldn't have come out and talked about this black hole. She should have come out and had a plan to deal with it, just sort of, if you like, scaremongering. I mean, the government inherited, if you think about it, if you go back to the summer when we had the election, the government has inherited an economy in sort of, if you look at near-term indicators, pretty good place. Inflation's pretty close to target, unemployment's low by historical standards, you've got growth well above trend, at least we did have. And since then, there has been this quite negative narrative being spun by the Labour government, and it's about blaming the Conservative government for all of this. And I think there really needs to be, and the evidence, as you've just said, that affects people's behaviour. So I think there needs to be a shift in narrative a bit. Think about forward, how we're going to fix this, not blaming people for what we've inherited. And I think the budget's a point at which hopefully they reset and they say, look, this deals with the problem. Let's now look forward and try and sort of, get the economy going again.
Andrea, you have a great industry because it really is kind of at the cusp of what the economy, I mean, it's probably one of the earliest indicators of probably a shift. Have you seen, when you look at the luxury companies, is it because there was too much euphoria on how much they could sell, or do you think there's an actual shift of people saying, even the ultra wealthy saying, well, hold on, let me see what's next?
The luxury industry has been in probably a super cycle for the last sort of the 3 years, 2020 to 2023. It was really, unprecedented growth. They put prices up. Some consumers were priced out. That aspirational consumer was priced out. The wealthy were still spending. Now we've got China. We've got to see whether this is a cyclical issue or whether it is a structural issue away from luxury. I think it's cyclical rather than structural, but we're still at early days.
So when do you find out? So it's not, you basically have to strip out the companies that have the it bags, right, or what's selling to see what happens to the rest of them.
And it's very polarised. You've got LVMH still has got the might and the dominance. You've got Hermes, people with long waiting lists for bags, but then you've got Gucci, Kering's Gucci, you've got Burberry that are trying to turn themselves around and that are really suffering in this environment.
And when you look at consumer spending and therefore look at European equities, is there a big difference between Central Europe to what is happening in the UK, which is holding up a little bit better than expected, especially if we're going to see the Bank of England go steady as she goes?
Absolutely. So the sentiment in Europe has been subdued for quite some time, right? But what I would point out in the UK, which stands out to me, the way I look at things from the economic perspective, is that the UK GDP, well, both the Eurozone and UK GDP had been very weak last year. They've been upside this year. But the biggest upgrade to the GDP, and of course consumers' consumption is the biggest part of GDP mix, have been upgraded the most, right? So it feels to me that in comparison to the rest of the world, that's one economy that keeps being upgraded and defies expectations. So the growth is still low, but it's picking up. You can see the same in PMIs. It's quite interesting.
Yeah, so interesting. Thank you all for joining us. Andrew Felstedt from Bloomberg Opinion, Dan Hansen from Bloomberg Economics, and Beata Manthi of Citigroup Global Markets. Much more to come, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Authorities.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Well, Bloomberg has learned that the German government has started an internal probe into the handling of the Commerzbank share sale. This comes after the transaction allowed Italy's Unicredit to swoop in and take a major stake in the lender. We understand the office of the chancellor is not happy with the outcome of the placement last week, which was overseen by Germany Finance Agency. And Apple launches its iPhone 16 lineup in stores in over 60 countries today, including the US and China. Well, the latest model will not come installed with the hotly anticipated Apple Intelligence AI software that the company has been touting since June. Now, those features are expected to be available for download in the coming weeks and months. Coming up, Israel ramps up its airstrikes across southern Lebanon as Hezbollah's leader vows retaliation. We're live in the region next, and this is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The stock rally pauses in Europe as euphoria ebbs over the jumbo Fed cut, while meanwhile the yen erases gains as the BOJ signals no rush to hike. Nike jumps pre-market as it replaces its chief executive with a company veteran in the bid to return the struggling brand to its glory days. Plus, Mercedes plunges after slamming the brakes on its outlook, blaming poor sales in China in the latest sign of trouble for German automakers. So, on to geopolitics, and Israel has launched extensive airstrikes across southern Lebanon, stepping up hostilities after it declared a new phase of war against militant group Hezbollah. Now, this comes as the leader of Hezbollah has vowed to retaliate against Israel, blaming it for the mass explosion of telecom devices.
This will be confronted with a severe reckoning and a just retribution in expected and unexpected ways. But because this new battle involved hidden hands, let me change my approach. I will not talk about a time, a form, a place, or a date. Leave the subject, and the news will be what you see, not what you hear.
Let's bring in Bloomberg's Jumana Bersetche. Jumana, I mean, these are some pretty incredible things that have happened in the last week. Heaviest strikes by Israel in Lebanon since the start of the war. How's it impacting everyone on the ground?
Yeah, well, Francine, it's difficult to imagine a week such as the week that was seen in the last couple of days in the Middle East region. And let me just recap as well, because there was a lot of attention on Hassan Nasrallah's speech yesterday. This is the first time the Secretary General of Hezbollah had said anything in public since those series of explosions rocked the country both on Tuesday and Wednesday. The Lebanese Health Ministry now saying that those explosions have taken the lives of 37 people, injuring 2,800. But in the speech yesterday, Hassan Nasrallah blamed Israel for the attack, saying that they had crossed all red lines, but then also conceded it was actually a huge security and humanitarian blow. And he said the attacks will not deter Hezbollah from firing on Israel. Interestingly enough, Francine, he also was very explicit about the connection between Hezbollah's ongoing strikes on Israel and the war in Gaza, saying that they would only halt attacks if Israel stopped the aggression on the people of Gaza and the West Bank. Now, concurrently, many eyewitnesses said that during the course of the speech, some Israeli air jets were flown over Beirut, breaking through the sound barrier, causing some sonic booms. And then later, in the course of the evening, there were reports of hundreds of strikes on rocket launchers on Hezbollah infrastructure in the southern part of the country. And according to Lebanese security officials, this is the biggest wave of airstrikes on Lebanon since October the 7th. And so if you piece together everything that has happened this week and also the commentary from Israel, the Israeli Defense Minister Yoav Gallant saying the center of gravity has moved to the north, what we are seeing now is an intensification on both sides. There has been an escalation on the Lebanon-Israel front.
Jumana, thank you so much. Jumana Barsecha there in Dubai now. For more on this, let's also bring in Ross Matheson, Bloomberg's EMEA News Director. Ross, I mean, this feels, of course, like an escalation, but it also feels like a moment in time where we'll maybe look back and said this could have been handled differently. What's the U.S. doing?
Well, the US has been urging calm, as is often done over nearly a year now at this point, and saying obviously that intensifying with Lebanon, with Hezbollah in Lebanon as well, is probably not in the interest of Israel itself. But really what we've been seeing from the US and the US allies and countries in the region are these efforts to manage this situation throughout. So manage it in terms of trying to get a ceasefire in Gaza between Hamas and Israel. And we know that that's still struggling very much, and time is running out on that front to get there before the Biden administration changes over, for example. And now, as Jumana was saying, we've got tensions really picking up in Lebanon with Hezbollah, and the prospect, again, of a widening conflict in the north. So Israel fighting on two fronts there, and allies concerned, if you've got two big fronts happening, at what point does it escalate even beyond that into more of a regional conflict?
But what's the end game for Israel here? Why are they going after Hezbollah in Lebanon?
Well, certainly they're determined to return their residents to the north of the country. These are people who've evacuated because of the daily rocket fire that's going on, over the border. And they say they want these people to return. And that's a war aim, as they call it. But by doing that, they have to protect the north. So they've got to bring their soldiers out of Gaza to the north. They've got to engage more with Hezbollah. And then, of course, what we saw this week with the exploding pages and other devices. And so they feel that they've got to do this. But, of course, that just escalates with Hezbollah, and again, the prospect of retaliation is in the air.
Rosa, is this playing out actually in U.S. politics? So Donald Trump yesterday at an event was suggesting that his support for Israel should bring in more Jewish votes.
It was interesting because he was speaking to a Jewish audience, but he was sort of criticizing them at the same time. He was saying it was possible if he lost the election that their votes would have been the cause. If they don't vote for him and he loses, in a way, it's their fault, and complaining that he's not being treated well, as he put it, despite being a supporter of Israel. So he was repeating that quite a lot in his comments yesterday. He was also, yet again, this has been quite controversial during the campaign, saying that Jewish Americans need to show loyalty to Israel versus loyalty to the country they perhaps have born and grown up in, which is America. And we saw a rebuke that came pretty quickly from a Jewish organization after that, this sort of tropes they say around dual loyalty, because it's not so clear-cut in terms of support for Benjamin Netanyahu amongst Jewish Americans, even if they support, people in Israel who've been, hit also by this conflict. So he's treading in some pretty complex ground there, and it was a sort of an odd campaign stop to do anyway versus being out in the Midwest where he probably needs to be.
And Raza, on the other side, the Democrat Kamala Harris, so we had some new polls this week, but she also had a star-studded event and was interviewed by Oprah.
In the battle of her celeb endorsements, you'd have to say that Kamala Harris is winning. Taylor Swift, Julia Roberts, Oprah Winfrey last night. I mean, how much that matters, it's still a bit hard to know. But what it is a push to not just convince swing state voters, but to get Democrats out to vote in general, because that's the thing they really need across the board. They need Democrat supporters, existing supporters of the Democratic Party and of Kamala Harris, to turn out and vote on Election Day. And that's what these campaigns are really about, not necessarily bringing in other voters, but getting those people to turn up on the day. How much that sways it is hard to see, but certainly you can see that those campaigns going out heavily on social media across the country, being held in Michigan, very important area for Kamala Harris, and a strong endorsement from Oprah Winfrey.
So a strong endorsement from Oprah Winfrey, and actually in the interview she was also, I didn't know that Kamala Harris was a gun owner, and she said, that she'd be ready to use it. Does that help with the undecided voters? Was that strategic?
Well, it's interesting through this campaign because she's been a bit hard to pin down on some things. She's not in a lane, in a way, as a Democrat? Is she a progressive? Not really. Is she in the middle as a centrist, a Democrat? Not really. She has her own policies that kind of straddle all these areas, and she's certainly trying to draw those voters in. She's been very much cloaking herself in the American flag during this campaign, embracing again, Americana in her campaign speeches and her events, saying we're going to take that back from the Republicans because we're patriotic. And part of that is appealing to people around issues, national security, feeling safer in your home, issues around immigration, perhaps a tougher line on that, and saying, I own a gun and that's okay. It doesn't mean that she doesn't advocate for gun control, and certainly she's talked about that, but she was saying, I understand why some people may want to own a weapon.
So why the sudden jump in polls, actually? I mean, she's done, I think she's in certain polls 6 points ahead. Is that because she won the debate and it just takes a little bit of time to filter through?
Well, it's interesting because the polls where she's ahead are sort of national polls, so they're a bit harder to get a direct read from. She's 6 points up in some of those, as you say, but what we want to see is the very specific votes about very specific parts of America, again, those 6 to 7 states, and there, it's still really, really tight.
Okay, Roz, thank you so much. Terrific briefing as always. Roz Matheson, they're in charge of our news desk. Now, coming up, why reshaping transport in Asia could be a $1.3 trillion opportunity. Our interview with the founder and chief executive of impact investor Leapfrog. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Impact investment firm Leapfrog and Singapore's state-owned Temasek are launching a new report today on what they say is a $1.3 trillion opportunity to reshape transport in Asia. Now, the joint release focuses on unlocking the power of affordable EVs, offering a clean mode of transport to millions while reducing emissions. Now, this comes as Leapfrog's chief executive prepares to go to New York Climate Week to speak about the significant investment opportunities as the world transitions to cleaner fuels. Well, I'm very pleased to be joined by Andy Cooper, the chief executive of Leapfrog. Andy, welcome to the program. You're on your way in transit, actually, to New York to talk about Climate Week. I don't know whether there's many more investments than people care to talk about because of political backlash. So do you see the money there, but kind of hidden because people don't want to advertise it?
Well, there is an extraordinary amount of capital that is looking to invest in the transition to electric. It is happening at great speed, and we do as a world need to bring that curve down of emissions. We see amazing companies across Asia and Africa, for example, which contain together over 5 billion of the world's 8 billion people that are delivering, whether it's electric vehicles, rooftop solar, new innovations in food and agriculture, to that huge population growing at extraordinary rate, and they can take a lot of capital. So investors are getting excited about shifting from risk to opportunity, and that's what we're meeting next week in New York to discuss in multiple forums.
So, Andy, where would you deploy capital right now in a smart way?
We see India is tremendously exciting. So we have just released this report with Temasek, but also 2 companies, Mahindra and Battery Smart, that are serving this $1.3 trillion opportunity around electric mobility. If you think of the millions and millions of vehicles that are being bought every single year in India as people grow in their wealth levels, if they keep going on intensive carbon levels, if they have the usual fossil fuel engines, we're going to blow the world's carbon budget. Whereas electric vehicles are not just now better, they're cheaper. They're 40% cheaper over their life. So there's an opportunity now to roll out cheaper, better and cleaner vehicles to literally billions of people.
But Andy, it's very difficult to find the right one, right? I think in China they have about 100 producers of EVs. A lot of them are viable also because the government is pumping a lot of money into it. In Europe, you have players that haven't quite managed to go, for example, to the level of Tesla. So where, you know, as an investor, is it the components? Is it the parts? Like, where do you actually deploy that capital?
Well, you're absolutely right. And obviously what you want is managers and investors who know the market well. Right. I've been working at Leapfrog for almost 20 years, almost 30 years since I lived in India. We really focus on finding those incredible companies, often in the private markets, they're not yet in the public markets, and growing them at scale. So you have to go to the folks who have worked there for a long time. But are there opportunities across the value chain? Absolutely, across every single piece. What we're most excited about is the distribution piece, really that last mile of the billions of emerging consumers, because those people's income is increasing actually vastly faster than the average, albeit off a low base. And as they do that, as women no longer have to go in a car driven by a man or a bus driven by a man, but can take their own electric scooter to work or to school, you see a very dramatic change in the distribution of these kinds of goods, and the companies that deliver that are growing very fast. So that's where we see a great level of excitement.
And you're comfortable that we have the technology, because sometimes, you know, for example, in hydrogen, you have the technology, but then you have better technology in 2-3 years. So is there, you know, some investors say you can't scale too quickly because then your scale, it's like the USB keys, you scale but with the wrong USB key and then you can't fit it.
Yeah, so there are areas where we have not reached the green tipping point, but there are areas where we are far beyond it. Electric mobility is a case in point where we are far beyond it. It's actually 40% cheaper, right? So you're getting something that is cleaner and cheaper. But there are other areas, like areas of food and agriculture, or the built environment, or solar panels on rooftops, where it is much cheaper than the grid. The old grids can be incredibly inefficient in these markets, whereas new and exciting solar panels can be really efficient and very good for people, and they can actually feed back into the grid. So we are seeing areas where that tipping point has been reached, and we actually call it the green discount. It used to be you had to pay a premium to get your Tesla or whatever it was. Yeah. Now there's actually a green discount if it's approached in the right way. So in those tipping point areas, investors really can deploy trillions, and our report today really reveals that.
And is there enough appetite? Again, so what you're working on is in emerging and impact markets. Impact markets had a resurgence maybe 2-3 years ago, and I don't know whether, as returns were in certain places a little bit lower than promised, investors are, have second thoughts or have slowed down the amount they're putting in.
Sure, there are always markets like Ghana or Sri Lanka that have really struggled, but if you look at some of the major markets, whether it's Kenya, Vietnam, Indonesia, India, in which we invest, the markets are growing very fast. India is now the 4th largest economy in the world, projected to grow at 7-8%. It's bigger than the UK. It's growing vastly faster than the UK. So these markets where you can have the biggest impact on the most people are not necessarily small, uninteresting, or the most challenging. They can be the most exciting big markets. And so you really can achieve what we like to call profit with purpose, where you generate outsized profits and outsized impact. And because you're serving customers well, you're able to do incredibly well as a business and ultimately as an investor.
And I mean, India has been really, over the last 2 years, the biggest hope that the world is seeing. And then you speak to chief executives on the ground, and they say their main concern is red tape, is actually getting approvals, because there's so many layers of bureaucracy. Does that hurt or delay some of your investments there?
Well, I've been working in India, as I say, for over 30 years, and there's been a steady improvement in this. The regulatory approvals come quicker, the support for business goes faster, and the local ecosystem gets stronger. The ecosystem for exits, for deal doing, has completely transformed with multiple local and international funds going in. And so if you operate there as Leapfrog does, and it's our largest market, and our companies, tens of companies, serve over 200 million people in India now. If you operate there, you are in a whole new world of efficiency and opportunity. It's not without its challenges, but by the way, nor is the UK or the US. And so we're seeing a very different contour as to where you should invest in this new world, because these markets are often bigger, faster growing, with more opportunities and rich ecosystems, as well as more efficiency.
So would this mainly be for infrastructure in India? And we hear a lot about these public-private partnerships. We see Microsoft also, coming into some of these markets, really trying to be a catalyst. Does that impact what you're trying to do?
The public-private partnerships are a good opportunity, but I would say to people that the idea that it all has to be enabled by the public domain or the government is not necessarily true. You can have so many companies that just in their own right, are very exciting opportunities. And so what we're seeing is a real change in how people go about it. Some of the biggest investors in the world are arriving in India in force to seize the market opportunity. And they're going in with the usual expectations about risk and return, and not depending on the government to do that. Climate is a great example where there are so many businesses seizing this opportunity. It's not necessarily only in infrastructure. So we talk a lot in climate about decarbonizing the rich and Western countries. We talk a lot about infrastructure in the global South, but we don't talk enough about those 5 billion emerging consumers and how you serve them and the companies that serve them. And so I hope this can be a big topic of conversation next week in New York. And Leapfrog alone has reached, through our companies, 588 million people. So the idea that this is not a scaled opportunity, the idea that you can't make a lot of money while doing a lot of good, is a very old and poor idea. And I think profit with purpose has really been proven in these markets in recent years and by determined players.
Andy, thanks so much for joining us. Andy Cooper, they're founder and chief executive of Leapfrog Investments. Now, coming up, Mercedes cuts its full-year forecast and the latest signs of trouble for German automakers. We'll have plenty more on that next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Mercedes shares slumped the most in 4 years after the firm slammed the brakes on its full-year outlook, citing poor sales in China. Now, the luxury car maker's chief executive says he's preparing a new EV product offensive in the country. Well, we're now joined by Danny Lee from Bloomberg's Asia Transport team. Danny, thank you for joining us. What exactly is behind the problems at Mercedes, and how much trouble does this speak to the wider German auto sector?
Yeah, another German auto brand, a top household name, in trouble because of China. And what we are seeing in China is a weak consumer sentiment for certain cars, changing consumer habits, and particularly the rising competition from Chinese automakers, as we have been documenting for many a year now. And so we are seeing this problem emerging for Mercedes. And when you take a look, rather, at all the other brands out there, Volkswagen facing problems back home in Germany, you also have Porsche and also BMW facing challenges, and challenges on production, on the supply chain, facing with unions and R&D and strategy. So it speaks to a wholesale problem facing the German auto industry, and you have to just wonder who else is out there facing problems.
Yeah, it's pretty concerning. So what's the latest with tariff talks between China and the EU? How much closer, Danny, are we to a breakthrough?
Well, there seems to be more positive mood music between Brussels and Beijing, and we heard from both sides saying that they will be stepping up with more intensive talks as the deadline nears, basically September 25th, potentially a vote in Brussels on these tariffs. And so these both sides will be working very closely to see what common ground that they can find in order to try and avert this potential tariff situation.
So, Danny, overall, what happens next? Are we going to see, is the market just going to be on tenterhooks to see if this happens to anyone else?
I think so, and clearly that Beijing is looking at maybe some kind of compromise, and we've been looking at this talk of maybe some restrictions on how many, for example, Chinese EVs are exported into the European market, maybe even some price control. It's not something that Brussels had originally thought as something that would work, but at least both sides are trying to hash out some kind of agreement, because at the end of the day, for both sides, no one wants a rising escalation of this potential trade war.
Danny, thanks so much. Danny Lee there from Bloomberg's Asia Transport team. Now, Nike has ousted Chief Executive John Donahoe and is bringing longtime executive Elliott Hill out of retirement as it tries to return the struggling brand to its glory days. Now, Hill joined Nike in 1988 and served as president of Consumer and Marketplace before he retired in 2020. Nike slashed its revenue forecast in December, losing ground to competitors. You can see Nike gaining some 6.6%. FedEx, on the other hand, is kind of getting slammed pre-market. It says business should slow in the year ahead and reported a worse than expected quarterly profit in a warning sign about the direction of the U.S. economy. Up next, Bloomberg Brief, Danny Berger and Manus Craney in New York. This is Bloomberg.
countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set your agenda.
39th record of the year. Stocks are at another all-time high. Can the risk-on euphoria endure? A momentous week of central banks concludes. The BOJ leaves rates unchanged while mulling the next hike. And management shake-up. Nike jumps after veteran Elliott Hill swooshes out of retirement to step in as CEO. Good morning, Manus. Great to have you back.
Danny, good morning. Good to be back. A moment of reprieve in these equity markets. 39 records in a row, as you say. The question is whether it's exuberance or irrational exuberance. Bank of America, Hartnett is on the tape talking about bubbles again. Maybe you want to buy the dip in the price of bonds and the rise in yields. But for equities at the moment, 7 sessions in a row rising on the Russell. You're looking at the CIO for BMO still raising their year-end forecast to 6,100, another 9% to go. So for the moment, it is rational investing exuberance at the moment. To the bond market, the curve disinverted yesterday a little bit more aggressively, 14 basis points between the two at one juncture. The bond market seems less convinced that you needed 50 basis points than elsewhere. At the bottom of your screen, you're going to see dollar yen. Again, a cautious rhetoric from the Bank of Japan, Danny. They didn't want to run the risk of deja vu like they had the last time. So really, the Bank of Japan has time to assess the situation, seems to be the message. Danny, good morning.
Good morning, Manus. I think for the Fed, we really have to give Powell credit for the ability to do a narrative shift. You saw it in the equity market yesterday that you were talking about. Another all-time high, credit spreads back at the tightest since July. If Powell wanted to inject a narrative shift, that is one of soft landing, he succeeded in that. And we know for recessions, it's so psychological. So his ability to arrest this idea that we would be heading for economic downturns, he was able to do that, and now we have one where everyone is saying soft landing, so maybe it is recession avoided.
And it's interesting because the narrative was you want to sell the first cut in the equity. I mean, that was Bank of America,
yeah.
sell the first cut. Here we are. It looks as if this 50 basis point cuts is being accepted as being an insurance cut rather than a disaster recovery cut, so to speak.
Well, you look at something like FedEx earnings yesterday, for example. They were quite weak, and FedEx is known as this bellwether because it interacts with so many industries. And it's those types of corporate narratives that people have been calling for decisive action from the Fed. So now maybe you can look at a FedEx and not be as concerned of the global ramifications of it if you do have an aggressive cutting cycle.
And I think the narrative from FedEx is very clear, is that we're trading down from that super express high-value ticket to something a little bit less aggressive. Let's talk a little bit more about these markets. We've got Mark Dowding, RBC, Blue Bay, stepping in this morning. Looking back at the Fed's decision, he writes this, quote, "Instead of economic slowing, we might even witness a mini boom." And it's not lost on us that Powell may have quietly wanted to juice the economy as much as he can in the short term with November's election in mind. Mark, good morning. Good to see you this morning. You would suggest that this 50 basis point cut is a preemptive floor-setting measure. But then what did you take away from that word recalibration, which was so often used?
Yeah, look, from my perspective, it's there's a sense in which Powell had already achieved a soft landing. So ahead of this meeting, we'd already seen a situation where inflation was coming back to target. The economic trajectory has remained pretty robust. If you look at Atlanta Fed's nowcast, we're running at 3% for current quarter GDP. if you look at the economic surprise index, it's bounced 40 points from its lows in July. So the economy has already been doing fine. In my mind, there's a bit of a sense here of having achieved a soft landing. It's a bit of a case of, right, let's see how fast we can get this economy to go, notwithstanding a return towards more inflation pressures. So in a sense, I feel this is a Fed chair who's prepared to be a bit more experimental and wants to run this economy hot.
If he wants to run this economy hot, he wants to maximize growth, as you write about, Mark. What do you do with the dollar then? Because you have a hot running economy, but cutting? What do you do?
Yeah, so here I would say that in as much as you've taken, we thought the recession risk was very low to begin with, but yet now you've completely kicked it off the table. And from that point of view, we may actually see an outcome where, because the Fed has played its hand and has effectively said that we're going to be there to cut aggressively, we want to do what we can do to boost growth. You may actually see that this actually ends up leading to fewer rate cuts than you would have seen if you'd have actually ended up with an economy actually slow down. So that's why I'd be looking at December 25 rate pricing 200 basis points lower than we currently are. And actually, I think that is unlikely to be realized. But when it comes to something like the dollar, on the dollar, I think in the near term, we've seen a move towards a weaker dollar and weaker DXY. But going forward from this point, if we continue to see robust growth in the US, which is our expectation, we actually think that the near-term data is going to be stronger, not weaker. If you see that, I think the dollar's weakness is likely to be short-lived.
You talk about an experimental Fed, but yet less than the 200 basis points that's been put on the slate. Is the risk that inflation becomes stickier and reasserts itself if they're really trying to juice this economy and they've gone for this front loading of 50 basis points?
Look, I think that risk on inflation is there. It's something that the Fed will be sort of thinking about sort of quite cleanly. I think the other thing to throw into the mix here is the US election. Where we see Trump win, we think a Trump victory is likely to be inflationary through the lens of fiscal policy, through the tariffs, through moves on immigration that will tighten the labour market. We'd actually look at a Trump outcome as being inflationary and relatively bad for fixed income yields. And something that I've argued before is that when we look at the current economic cycle, we think this has got echoes to the 1990s, not the 2010s. What we saw in the 1990s, it wasn't uncommon to see situations where the Fed would cut rates by 50 or 75 basis points mid-cycle, only for rates to then go back up again. And the thing I'd say to you is that don't be surprised if you end up seeing an assertive Fed in the near term, were you to see a Trump victory manifest. I wouldn't rule out the idea that you might get a rate hike at some point by the end of 2025.
So is it just load up on risk until that moment, Mark?
I think so, yeah. So for me, I like the idea that effectively the Fed's given you a bit of a put here. You want to chase risk assets. I actually think quite a lot of investors have been underinvested because they've actually been fearing economic downside. We see this in credit. We see a lot of money coming into credit funds, but actually a lot of credit investors have been sitting on the sidelines. And actually we might see a real desire to actually load up on risk in the short term that could actually mean that markets are quite bullish in the relatively near term. And we obviously saw that in the price action yesterday. That came as no surprise to me whatsoever. I think it's certainly the rational interpretation in terms of what to be doing on the back of this Fed decision. And I think it was quite telling the fact that actually we saw bond yields actually a little bit higher than the Fed meeting, notwithstanding the fact that this was a dovish surprise. We've actually seen inflation break-evens move a little bit higher. Effectively, I think investors are looking at the action here and saying, yeah, you want to own risk.
And owning risk across the board has been there in equities and in credit. Let's just extend further on the bonds because we saw 2s, 10s, that disinversion, that steepening continue yesterday. Do steepeners play the main portion in this duration trade for you?
Yeah, so in terms of the curve trade, this is one that we have a lot of conviction in. I think the 2s, 30s is going to be moving steeper. I think part of this is longer-term inflation uncertainty, but a lot of it is down to the fiscal trajectory as well. So this fiscal trajectory of travel, I think, is something that I think myself, with a lot of bond investors, have thought will end up steepening the curve over time. So I'm less focused on 210s, much more focused on 230s, if I'm honest.
Mark, you know what my most positive takeaway from this is, or one of them, is that we didn't even talk about the BOJ. The BOJ is boring again. Nature is healing. You love to see it. Mark.
Japan is boring, and they're not going to go in October now because of the LDP leadership election.
Right.
That could easily trigger a snap election. So we think probably January will be the month they go in Japan. So you're going to have to wait. And in the near term, that could actually see the yen actually a bit softer as we're seeing today. But if it goes up towards 150, you want to be buying it there. The direction of travel is still set in Japan. I just think you need to be patient.
Okay, and patient we will be, Mark. Always a pleasure to have you on. Mark Dowding of RBC Blue Bay Asset Management. Let's get to some other top stories now that are trending on the terminal this morning. Warren Buffett's sale of Bank of America shares have now covered his investment. He is currently left with more than $34 billion of pure profit. Yesterday, a filing showed that Berkshire Hathaway had sold another $896 million of stock this week. That puts the total sum since mid-July, plus dividends since 2011, above $14.6 billion, and that is the amount that Berkshire spent building its stake.
Johnson & Johnson has boosted its offer to settle thousands of lawsuits by people who claim its baby powder gave them cancer. And the drug maker added over $1 billion to the offer, bringing the total settlement to $8.2 billion. That's according to people familiar with the matter. The company maintains its powders never caused cancer and were appropriately marketed.
Shares in Mercedes plunging this morning, down 6.7%. It cut expectations for its main cars unit on sluggish sales in China. It's just the latest sign of the struggle in the German auto industry. Both VW and BMW forecast pessimistic outlooks earlier this month. Mercedes CEO, for their part, is pledging to do whatever it takes to bolster returns.
Coming up in the show, Nike jumps pre-market as it brings the company veteran out of retirement. We'll bring you the story. That's next.
And later this hour, we're going to catch up with Mizzou host Steve Rasciuto on potential inflation risks following the jumbo Fed cut.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
your Bloomberg Brief. Danny Berger and Manus Craney back together again in New York. Let's get a check on shares of Nike this morning. They're extending gains, up 6.7% pre-market. The sneaker giant replaced the CEO, John Donahoe, and brought in a veteran executive, Elliott Hill. Told him time to get out of retirement and back into the CEO seat. It's part of an effort to return the struggling brand to its glory days. Let's discuss this with Andrea Felsted from Bloomberg Opinion, who covers the retail sector for us. I mean, Andrea, first of all, there's been so much CEO turnover this year for different companies. It's like a new CEO is the new buyback for corporate stocks. So why bring Hill out of retirement? What was happening at Nike?
I mean, this was really becoming inevitable. There was open discussion that he was going to have to go because the performance had been so poor. Stock's down 25% this year. It's really struggling against Adidas. So, it's surprising really that it took this long.
Andrea, good morning. Look, the Big Take wrote a cracking piece, which was that he peeved some of the relationships.
Is that the word they used?
I don't think that's the word they used, and I want to keep my job, so I won't be repeating what the Big Take actually wrote. But here's the thing: he's a man from Bain, and he knew how to operationally juice up the system to deliver on a timely basis. But he gave up shelf space, and that was the biggest error, they say.
Exactly, and also don't forget he came to rebrand, moving out of many retailers to concentrate on selling through Nike's own stores and website, which is exactly the strategy that the luxury brands have. So on the face of it, it looked very good. The trouble was that the sportswear market is becoming much more fragmented. So when Nike pulled out of stores, there were many other younger, more exciting brands to take its place.
Andrea, just on that point, it is a more competitive market now. I remember a time when if you were buying sneakers for sports, it was kind of Nike, maybe Adidas. There wasn't a lot of options. Now there's so many, and kind of as you're alluding to, these more luxury brands like On Brooks. You go out in New York City and you see them everywhere. Is this just a changed market that Nike's in? Can it really get back to where it was before?
I think this is a permanent change, actually, and I think this is, the shares have gone up a lot today, and I just wonder whether some of the challenges of getting its groove back are really being appreciated. Adidas is still very strong. There's been a real, fashion change as well, away from Nike's chunky basketball sneakers to these low-rise, retro styles that Adidas specializes. Okay, fashion's very fickle. It can change again. But at the moment, it's not really showing any sign of turning around. And these cycles where Nike is in the ascendance or Adidas is in the ascendance can last a couple of years.
Well, just keep your panda dunks on there, Andrea. They certainly were a winner for him at one stage when he was in the ascendant. Andrea Felsted on the very latest changing management seats at Nike. To a different story now. FedEx. The show's dropping double digits this morning after reporting worse than expected quarterly profit. The CEO, Raj Subramaniam, calling the quarter challenging as the shipping giant sees lower and slower business in the year ahead. Benedict Camel is with us for the latest from Berlin. Benny, good to see you. Look, the key takeaways from this report is that, yes, we're shipping packages, but we're not paying a premium to do it. And that's the real canary in this story, isn't it?
Yeah, you're absolutely right. Good morning, Manus. Yes, as you say, people are still shipping, but they're having second thoughts about how they are shipping. There are principally two ways you can go about this. You can do the ground way, which takes a little longer, but is reliable, or you can do the express, and that's sort of the legacy FedEx business that they were built on historically, and that's the business that was really suffering in this latest report. People are having second thoughts about how they ship. They're moving away from the more lucrative express into the ground operation. So that's something that's fed through to the numbers and the outlook. So the company giving a more muted outlook for the year, saying that things will be slower. You're seeing it reflected in the stock price. And that has really spooked a lot of investors because FedEx is such a sort of bellwether for the industry and for the economy at large. And if people are having second thoughts about how they're shipping things, that's not a great signal. Just at a time when people are thinking that inflation was under control, that people were sort of getting a little bit more comfortable with their cost. So that sort of seems to pull people back a little.
To that point, Benny, if it's about a macro thing weighing on FedEx, what can they even do at this point?
they have already initiated a couple of steps. They are, for instance, integrating their ground and their express business. That's quite a change from the historic separation of these two assets. So the CEO's saying this will help us run the business more efficiently. They are also turning the cost screw. They are cutting some jobs. That's sort of what they can do at the moment. Whether they are able to do something on the pricing side towards the back end when people ship more for the holiday season. So they might be able to recoup some of this in the next couple of months, but for the time being, the outlook is quite dim.
Benny, thank you very much. That is Bloomberg's Benedict Campbell. Manus, a quick check on the yen. It's a quiet market, maybe except for the yen. It is weakening this morning versus the dollar by about 0.8%. It's just an interesting one because the dollar's been weaker against most currencies because of those cuts. But again, with a boring BOJ, we're just looking forward to what happens next.
Be grateful for a boring BOJ. That's what I say.
Nature's healing.
Nature's healing. You're quite right. Some of those stock moves are pretty severe. FedEx down nearly 13%. We'll keep an eye on Nike in the pre-market. Coming up, we're going to discuss the other big headlines of the day. And it is a big day for Apple. Will Danny Berger get in the queue for a new iPhone? That is the only question on iPhone 16. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
It is Bloomberg Brief with me, Manus Graney, and Danny Berger alongside me in New York. Front pages. This is what we're checking out around the world. The first story is the Financial Times leading with Israel strikes on Lebanese targets as the Hezbollah's chief warns of red lines being crossed. Hezbollah blamed Israel for explosions this week in hospitals and pharmacies, among other civilian areas. Israel's military said it was striking Hezbollah targets in Lebanon during what they call a new phase of this war.
Next up, the New York Times has this. Harris has been hitting core campaign themes. And what was an emotional forum with Oprah Winfrey? In it, she really leaned on celebrity. Meryl Streep, Jennifer Lopez, and Chris Rock were all among those who joined that virtual town hall in Michigan.
And Bloomberg, front page of Bloomberg.com. Apple, the iPhone, the new one, hits the stores without its highly awaited AI features. It's launching the iPhone 16 today in nearly 60 countries. Apple Intelligence features, though, you're going to have to wait for those for a few weeks. Are you going to buy today with the anticipation of AI tomorrow? It's jam tomorrow for everybody. Have you got that patience, Danny?
Well, this is the thing. They have this new update, the new iOS, I think 18, and it's really good. I look at this and I'm like, why do I need a new phone? I don't need a new phone. Everything works great on my iPhone 12.
Can I just tell you, they've got a new camera button, so this is going to be pretty. Yeah, that's actually why it's pretty prescient for me. Never mind the AI. It's all about camera control. And Danny says I need to get rid of my millennial pause.
Oh yes, you do, Manus. Manus has so many
millennial pause.
I swear, watch all of Manus's videos. Maybe
millennial
like
pause.
1 out of every 10 doesn't have a millennial pause. I don't know if our viewers even know what that is. But anyway, Manus, on a more serious note, this issue of people not buying iPhones because of the new, it's a thing. Min-Chi Kuo, who's a TF International Securities analyst, last week caused a sell-off in Apple because he saw sales were going to be 13% lower than the last round last time because they don't have AI in it.
And it's a question of whether it's a delayed spend. $799 through to $1,199. 37 million units were booked in the weekend just gone. Now that is down 13% on last year's launch. So you can understand the nervousness.
Yeah, exactly. Those are those numbers from Min-Chi Kuo. Okay, coming up, we're going to catch up with Mizzou host Steve Rasciuto. That's next.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger, alongside Manus Cranny. Let's set your agenda.
It is the 39th record of the year. Stocks close out at another all-time high. Can the risk-on euphoria endure? A momentous week of central banks concludes. The BOJ leaves rates unchanged while mulling the next hike. And a management shakeup. Nike jumps after veteran Elliott Hill swooshes out of retirement to step in as the CEO. Danny, good morning. Swish that away.
Well, the hopium is alive and well, whether at Nike or these markets. As you say, we close at another 39th record. Small caps getting a huge boost, rallying for 7 straight days. That is their longest winning streak since 2001. Today, we take a break. We take a breather. We're down 0.2% for the S&P 500 future session. Maybe it has to also do with FedEx. A poor earnings and outlook from them. 2-year yields, not a lot going on here. We did see a lot of curve steepening. Curve steepest since 2022 at this moment of where we're at. 3.58% is your 2-year yield. Meanwhile, the BOJ stands pat. No fireworks, as we say, Manus. It was boring. Nature is healing the fact we got a boring BOJ. But because of that, no real hints as to where hikes are going to go. You are looking at a weaker yen this morning. Dollar appreciating 0.8, just about, of 1% versus the yen because I feel like rounding.
You round away. Mark Downey was with us a little bit earlier. He said, look, if you get back to 150, that's where you want to be a seller of it. But I think it's a question of the experimental nature of this Fed. That's according to Blue Bay's Mark Downey, Danny, and that's what he said. This is more like the 1990s than it is 2010. This is an experimental Fed. They want to juice this economy as much as they can. You can maybe put that down, maybe to a little bit of, getting out ahead of the politics. But either way, the risk is that you maybe end up with a little bit higher inflation and maybe not the full 200 basis points of cuts that is penciled in.
Yeah. Steve Raschuto has a really interesting view on this. I'm excited we're going to talk to him in just a moment. But I think all of this makes the dollar call so hard. You can say the Fed is cutting, therefore the dollar should be weaker, but at the same time they're trying to maximize growth, which would suggest the dollar should be stronger. And maybe they won't get as many cuts, which also suggests maybe the dollar will be stronger. It is really confusing also because they're not going at the same pace as other central banks at this moment too.
And the other aspect of the dollar is we're all driven by rates at the moment, but there is the RORO, which is risk off. In other words, if you get geopolitical risk, as is very live and very, very real between Israel and Hezbollah, if that escalates, what role can the dollar play in that? Because we have seen the dollar play that role of not perfect hedge, but a good hedge in geopolitical angst.
That is such an excellent point. I do want to get to that call from Mizuho Steve Raschuto. Here's what he said, writing in, quote, the potential inflation risks associated with an aggressive easing strategy were completely ignored, even as inflation is still well above target and the jobless rate remains historically low. I'm pleased to say that Steve joins us now. He is the chief U.S. economist at Mizuho. So, Steve, was 50 a mistake in this context then? And a Powell who basically said in so many words that inflation is vanquished?
Yeah, I mean, I think what the Fed is trying to do is to try to capitalize on the fact that foreign investors are interested in being involved in the U.S. marketplace as a safe haven, and that's driving down long-term yields. And they're reading that decline in long-term yields as saying inflation expectations are anchored. The reality is because they're exploiting their credibility, they run the risk of losing their credibility. And when you lose your credibility, it becomes awfully hard to get it back. So there's a fine balancing act that they can run with for a while until it blows up. And the risks are that it will blow up, not that they will continue to pull it off. And going back to your discussion about the currency, the other key factor about the currency is inflation. You look at Europe, you can argue outside energy, Europe is in deflation. Japan, outside the currency, Japan is in deflation. China is definitely in deflation. We're sitting here with above target inflation, above trend economic growth, and this Federal Reserve wants to cut interest rates and has already effectively done it through forward rates, every bit as much as is included in the dot plots. So the economy is getting the benefit from that, even without them having cut rates.
And one of your key concerns is that we get a reacceleration of growth and therefore not therefore, but the possibility of a reacceleration of inflation. And quid pro quo, less quotes than is penciled in and that the market wants.
That's 100% correct. I mean, the reality of the situation is they have set themselves up, I believe, for only one risk, and that is they can't accomplish what they want because they've effectively already done it. So now we're going to see an economy that was running above trend, okay, with so-called restrictive interest rates, and now we're going to so-called neutral interest rates. Where will that above-trend economy go? The answer is it's going to go stronger. And if you put monetary policy stimulus effectively in for 2025, and then you throw fiscal policy risks in, no matter who's elected in 2026, you're looking at back-to-back years of stimulus. That becomes a real inflation risk when we're already stuck at 2.6%. And this game of shadows, you know, inflation's really at 2% because if we take out this or we take out that, it's really not there. Well, I got news for you. It's an index for a reason. And housing inflation is driven by the labor market. The mistake the chairman made, and I think the real fundamental mistake this Fed is making is they believe the labor market doesn't generate inflation. It does. And he said that. He said the labor market is not the cause of the inflation. It is. People that are making money, people that are employed, people that are doing well, rent homes, they buy homes, they drive up housing inflation, and that's why you have an inflation problem. There is a supply issue as well, but that ain't going anywhere. So you're allowing the demand side to continue to stretch the supply, and that's just going to keep that component of inflation hot.
What does that mean in terms of the balance of risks? Because as we're talking about, Powell made it very clear, almost as if this is not a dual mandate central bank, that this is a central bank focused on the labor market.
Correct.
But what of the weakening in the labor market? What of concerns of FedEx this morning saying that they're having poor earnings, the bellwether company? What of those types of risk? What is the balance that the Fed should have been striking?
When you look at a company like Federal Express and you look at the position they're in, clearly there was pricing issues that came about. I know this from having to ship, product around the world when I'm going to different places for presentations. Okay, it's gotten expensive. So the reality is, yeah, if I send it out a week earlier and it goes through a more traditional channel, company saves a lot of money. No excuse there, but their loss is somebody else's gain. And therefore, it doesn't affect the overall macroeconomic environment. This is a pricing problem, and that's a problem they're going to have to address. They're trying to address it through cost cuts, which is good, but the reality is, in this environment, they're not going to shed an enormous amount of workers because they don't have an enormous amount of workers to shed. And the economy in general is dealing with a labor shortage. So the reality of the situation is we're still at below full employment. Cutting interest rates makes no sense.
It's amazing. Everybody else was coming in criticizing the Fed for being behind the curve. Here you are just smacking them because of what they've just done. But can we double down on this? Because you would say no matter who wins this election, you're going to have more inflationary stimulus next year fiscally. Therefore, what's the risk of a material U-turn by the Fed, which happened to them before many decades ago? What's the risk of having to pause or even raise rates next year?
That becomes the risk that they run. There's no doubt about that. As I said earlier, I think there's only one-sided risk to what they've done. And that is, as Larry Summers says, they can't accomplish what they want to. And quid pro quo on that is they can't accomplish what they want to. Do they have to take some of it back? And that depends. Since they're using forward rates, okay, they may never have to change the Fed funds rate. All they have to do is change the rhetoric, change the dots, and the markets begin to adjust incredibly fast. That's the point of this. Forward rates is the policy tool these days, not the Fed funds rate. The Fed funds rate is too political. It's too sticky. It's like trying to get people to go into the discount window to borrow. You can't do it no matter what you try. Same thing's true with the Fed funds rate. It's too political, attracts too much attention. Just look at the ridiculousness we went through going through in terms of this rate cut environment. However, they had already accomplished it as of Jackson Hole with drawing the line in the sand at a 4.3% unemployment rate, which incidentally reminds me more of Arthur Burns than Paul Volcker.
Okay.
The dynamic of the Fed, because the Fed speak we had heard coming into this, if you put Chair Powell's Jackson Hole speech aside, you wouldn't really be certain what they were going to do. Powell somewhat showed his hand at Jackson Hole, that he was interested in 50. But what you come out with is Powell being able to corral everyone except for Mickey Bowman around 50. I just wonder what you make of that dynamic, because we had just heard from Waller before the blackout period saying, I could be convinced, but he wasn't there. What do you make of Chair Powell's ability to get everybody there?
I think the problem is they did so much politicking. There were so many people coming out. News media went out and found everybody in the world who would say yes, and they didn't put anybody who would say no on until the day of. And so, yeah, it's an incredibly difficult position for these people to be in from a political standpoint, and this becomes the problem with the Fed funds rate. It is so political. And that's why forward rates are what they're really using to drive policy. And they can be very flexible with forward rates. And this is what Ben Bernanke is going out to people like the Bank of England and saying, this is what you're supposed to be using in terms of setting monetary policy. And they did it. He decided to do it unilaterally, or somewhat unilaterally, I would assume, at Jackson Hole. And he started the whole process. This is his mess. He's going to have to clean it up at some point.
And that transmission mechanism is live in the mortgage market. Rates down almost at 6%. You say use this moment to reduce your duration risk. So any pop in yield, you want to shift, lighten up the load.
Yeah, I think the thing that makes the most sense is when you look at the shape of the curve, and yeah, we're slightly positive here. We're what, a whole 10 basis points.
Yeah, 10, 13.
The reality is if I go into the bill space, I've still got a nice yield in bills, and I don't have any loss of capital risk as I go forward in here, especially if things start to go against them. And if you look at the claims data yesterday, you look at the continuing claims data, you look at what's happening in terms of the labor market front-end developments, you're seeing a situation where the economy's not going the path that they want. Inflation's stuck at 2.6%. The economy's healthy. We're going to be at 3% growth. We're likely to be stronger in the fourth quarter of the year. Surprising, not surprising enough. And the net result is, you know, we could be in a very different situation by the time we get to Christmas.
Okay, Steve, good to get your take. A robust discussion there on the Fed. That's Steve Risciuto. Coming up on the show, we will look at the key issues in the White House race. Of course, it's housing. Diane Tome, CEO of American Land and Title Association, is next. Context Matters on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
It is Bloomberg Brief. I'm Manus Rennie with Danny Berger in New York. We're 45 days out from when the American nation heads to the ballot box. And one of the key issues at the top of voters' minds, it's housing. According to a survey by real estate brokerage Redfin, Gen Z ranked housing affordability as the most important issue of all. This is, of course, on the back of the Fed launching its policy easing cycle and anticipation of further rate cuts to come. Diane Tom is the CEO of American Land and Title Association. She joins Danny and I this morning. Dan, good to have you with us. Let's just talk about the housing market. Mortgage rates are now back at a one-year low. We're in a Fed easing cycle. The risk in this housing market is that we see a furious unleashing of animal spirits. Is that the major risk that America faces now in the housing market? Let's start there.
Mortgage rates in anticipation of the rate cut earlier this week have already come down. So we've started to see a lot of movement in that area. We have a lot of refi happening. We have some housing constructions moving forward. But the reality is the affordability piece, supply has not shifted. So there's so much, and as you alluded to, both candidates have sort of addressed this at a high level, but that's really where we're going to see a lot of different things coming through.
In terms of that, Diane, I mean, there's been a lot of proposals thrown out there. For Trump, it's about immigration, saying that he's going to solve it because there's going to be less demand, because he's going to deport people, have less immigrants in. Kamala Harris is talking about this idea of trying to boost tax incentives to get home builders, and as well as giving first-time home buyers incentives. Diane, it's a lot, and there's a question as to whether any of this will actually be passed. But are you hearing anything that actually could be effective in lowering prices and reinvigorating the housing market?
You know, so much of what happens in the housing industry is local. So the fact that it's being talked about at the federal level is helpful, and the fact that they're introducing ideas, but really where it's going to happen, particularly when it comes to regulatory burdens, which is as much a critical piece of keeping houses from being built as the affordability piece and the supply issue. So much on the supply issue really goes back to 2007 and 2009. We have not built, you know, there's millions of houses that are not in the market that should be, that normally would have happened. So it's going to take some time, but based on as things are starting to move with the rates going down, lending, the folks in the construction industry are going to be able to access capital, we should start to see things move. It's just not going to happen really quickly.
Let's just build on that, Dan, because Business Week, Bloomberg Business Week, did an interview with Trump where he talked about bringing permitting down by nearly 50%. We'll be doing that. We'll be bringing the price of housing down. How realistic is a proposition like that you can reduce the permitting? Is that one of the biggest headwinds to housing?
It is. I mean, the regulatory environment is very, very difficult for anybody wanting to build in this. So being able to have access to cash, but also being able to work with the local municipalities and having the private investment involved is really, really critical. Hopefully, the fact that, again, both candidates are talking about it and have recognized the true issue of what's going on will allow that to continue to be addressed at the national level, but also in geographic areas. Because, again, so much about real estate and housing is very, very local, like most things.
Diane, you mentioned that after after 2007, the problem stretched back to then of when housing didn't come back on the map. And after the housing crisis, we had a lot of people just leave the industry, workers, different players. And then when the industry comes back, all of a sudden you get rate hikes from the Fed and mortgages are high and then it freezes. To what degree is what we're witnessing in the housing market a structural problem with not the right setup and players there who can actually build and get supply back onto the market?
You know, Danny, that's a really good question. Most people who are in the real estate housing industry, it's a very cyclical industry. So people are prepared, and they have to be prepared to ratchet up when, like in our case, like refis are starting to come back. And so people have been preparing for that because it's been a long 2 years since the interest rates have gone up after the pandemic, which was unprecedented. And we're never going to see anything like that again. Right now, about 60% of all mortgages are probably 4%. And that's not going to happen. Our hope is that with the rate cuts and the Fed indicating that they're going to continue, that maybe we get somewhere by the end of 2025 close to 5.5. But for the most part, I think we're not going to see rates like they have been. So the alternative is the supply and housing affordability is not going down. We all know that costs have gone up and things continue. So I'm not so much sure it's a structural issue as it is the economic winds and a whole host of historical events that happen that we still haven't gotten back to where we need to be able to house the people who want to be in homes.
Look, there's no doubt about it. It's the supply side of this equation. You can see it in Harris's tax incentives that she's potentially offering to organizations. But I want to talk about federal land, and this is where there's probably some bipartisan support. Trump proposes opening federal land to build new homes. But if that has bipartisan support, what are the guardrails? What's the most important guardrail around that needs to be implemented to make the policy real?
Yeah, no, that is such a great question because honestly, at the end of the day, every day we're working on a bipartisan approach on our issues. Because again, housing, we always say we're the party of title insurance, but we're not. Housing is a very bipartisan issue, and there are so many issues that are out there that do get support on both sides. And when it comes to the election, as you mentioned, Danny, as important is what happens on Capitol Hill, because that's where these policies are really going to be executed. You know, whether it's through your point, on the federal lands, that would happen through an executive because of the Department of Interior. There's Indian land. So, and then there's a lot of local states. So there's so many components to this that it really needs to be worked and addressed on a bipartisan approach.
On that local level, because I know you've mentioned it a few times. I mean, there's still a lot of NIMBYism, not in my backyard, still a lot of local red tape. What changes that?
You know, I think having access to cash, I think the builders, what we're seeing right now, the existing home sales are not moving because, again, most of those folks are rate locked, and it's going to take a lot for them to want to get out of those 2 to 3% mortgage rates. But in terms of supply, it's the new houses that are selling. It's the folks that you talked about, the Gen X and the Gen Z and the millennials. We have a huge market of folks who want to be in homes. It's going to be a location issue. Places like the Southwest and others where there's a lot of land and they can build in a much more, in a much more cost-effective way, you'll start to see that. But in some of the places in the Northeast Corridor and others, it's going to be very difficult because, you know, the land just doesn't exist.
Yep, and those locked-in mortgages, as you say, Fed cuts, there's not enough to change any of that. Diane, really wonderful to speak with you this morning. Thanks for joining us so early. Enjoy your weekend. Diane Tom, the CEO of American Land Title Association. Coming up, we're going to set you up for your trading day on this Friday. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you set up for your trading day on this Friday. Early and absentee voting will begin in Minnesota, South Dakota, and Virginia. Plus, we're going to hear from ECB President Christine Lagarde. She will speak at 11 a.m. Eastern. It's also Triple Witching Day, which will see over $5 trillion of options and futures fall off the board that move over. And Manus, I mean, we talk about triple witching all the time, and I guess, like, volumes are higher. It's never that big of an impact. To be honest, right? Like, volumes kind of go up and maybe some weird actions, so a little bit of volatility, but like...
It's a fairly chunky number. Let's see whether it delivers any volatility. I know you're sort of quite meh about the whole thing. But anyway, let's have a look at some of the stocks that we're watching. FedEx dropping as the profit and revenue forecasts are cut. Look at that. That is a colossal tank, down 13%. Lennar misses expectations for orders as rates challenge the buyers. And Nike replaces the CEO, veteran executive Elliott Hill. Let's get a little bit more on the CEO changes at Nike. Andrea Felstead is with Bloomberg Opinion. Andrea, all change at the Wish. Swish,
exactly.
Rather than wish.
Exactly, yes. This looked inevitable, really. Nike had been underperforming. Donahoe's strategy wasn't working. It had, you know, exposed Nike to lots of new competitive upstarts. Sales had suffered, and it really needed to get new sneakers onto the market and reconnect with retailers. That's what Hill will have to do.
Okay, Andrea, let's keep an eye on that. We've got that on the move. Andrea Felstead, Bloomberg Opinion. We've got Nike on the move, and we've got FedEx on the move as well. As we are trading down in your packages that you're sending, the price that you're actually spending, I hope you're going to spend a lot of money sending me my Christmas package by express post. Or is it Thanksgiving?
Yeah, we got to get through Thanksgiving first. I am going to London next week, so maybe I, like, mail you some, I don't know, Christmas cake. I'm trying to remember what things exist in London.
British marmalade.
You want Marmite?
Marmalade.
Oh, you want marmalade in the mail?
Yeah.
I feel like I can find something better for you, Manus.
Oh, you can send me something exciting in the mail. There's no problem with that.
Some Hermes, like, cuffs or something like that.
Oh, I'd like a new piece of Hermes. Go with the tie. Should we talk about markets?
Let's talk about markets. Markets save us. You do have equity markets weaker this morning. Bonds, a little changed.
Also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own three major, have stake in three major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me. And I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
I think one thing is clear. This is a Fed that is willing to surprise the market.
Trend lines here are still a bit disconcerting, so I think it makes every sense in the world for the Fed to start cutting interest rates.
The other takeaway is that the bar for moving rates lower is not that high.
From here on, they're going to be very deliberate and data dependent.
Let's see people move away from this Fed narrative to where's the economy, what do earnings look like, and I think that's going to be okay.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming into Friday at all-time highs on the S&P 500, following the best day so far this month. Equity futures on the S&P negative by 0.25%. We're down 0.4 on the Nasdaq 100. On the Russell, the small caps, Lisa, down just a little bit. We're down 1/3.
This is the sugar high after the party that the market was asking for, and the Fed delivered in a really big way. I love what European credit strategists for Bank of America, how they put it. Recalibration was the message, yet this was the most demanded Fed rate cut since the 1980s. Basically, you saw yields move. The Fed gave them what they wanted. This feels like a Fed that craves to be on the right side of the market.
So we've heard from one Fed official, Chairman Powell. We're going to hear from a few more. The Fed speak starts a little bit later. Look out for the Philadelphia Fed President, Patrick Harker. How many of these people were really on board with conviction to go 50 at this meeting this week?
That's one of the key questions that people have been asking, considering the fact that it looked like there was more support for 25 basis points before those articles came out in the Financial Times and the Wall Street Journal, indicating that maybe that wasn't the case. Nonetheless, this to me is the key question. If this is a Fed that doesn't want to be on the wrong side of the market, does that mean they are going to front load their rate cuts and more significantly be aggressive later this year even to add to what they already have done? And I think that is the tone that's really supportive of a lot of risk assets.
And not the only central bank that's had a decision to make so far this week. We've heard from the Federal Reserve. We heard from the Bank of England just yesterday. Overnight, we heard from the BOJ. Check out dollar yen. Dollar yen breaking out back towards 144, 143.93. On the screen right now, you see a weaker Japanese yen. No indication from the BOJ governor they're going to be hiking interest rates anytime soon.
This is what I find fascinating in terms of the parallels and the differences between the Bank of Japan and the Federal Reserve. There is almost an outward discussion around the politics of this BOJ meeting, that essentially the political calendar and the new prime minister has created an environment where they don't want to get on the bad side. So they're going to wait until December. This is Oxford Economics, to potentially hike rates again, even though the economic data coming out has only been supportive of another hike, given the fact that inflation readings came out harder than expected, that the economy is actually more resilient, that a lot of the inflation has just been supply chain related. The underlying scene is actually more inflationary. These are some of the reasons why people find this actually fascinating.
So all bases covered, almost. We've done the Fed, the Bank of England, the BOJ. We need to talk about the ECB. And I'm not going to talk about the euro. I'm going to talk about the stock of Mercedes. Shares down by almost 7 percentage points in European trading. Mercedes coming out late yesterday afternoon, cutting the outlook on, drum roll, one word, one country, China. Things not good in China, things not good for these automakers across the continent.
The shocking part of this is we've known this. We've known that China's been a problem. We've known that China's demand has been flagging. And yet the deepening slowdown in China was even more significant for Mercedes than expected. They cut their expectations for its main cars unit and now sees adjusted returns between 7.5% and 8.5%, compared with a prior forecast of as much as 11%. This, to me, the fact that they're talking about earnings being significantly below where they were in the prior year, highlights how all the problems that people see right now in the US and the German auto manufacturing industry are even worse. It really creates a structural problem.
Have we seen the worst of it? The Bundesbank has come out and said Germany might already be in recession, just about acknowledging how bad things are. They don't think things get a whole lot worse. We'll see. We had one ECB official, Mario Centeno, that's maybe waking up to reality, who said, given the position in which we're in today in the monetary policy cycle, we have to really minimize the risk of undershooting the inflation target, because that's the main risk right now.
That has been, honestly, what a lot of people are worried about. All of this goes back to this question that we've been asking. Why is the ECB not cutting rates more aggressively than the Federal Reserve? Because ultimately, what is the flip side argument if you see all of these downside surprise potentials for growth and inflation? A bigger question to me also is, how does a central bank play into decisions that are ultimately very political? And this has been with the quagmire that we're seeing in the ECB, the Bank of Japan, and the Federal Reserve. And I think that that point is going to become increasingly preeminent as a lot of people look at the interplay between fiscal and monetary.
We'll get to the politics of the Federal Reserve a little bit later. A bit of a mistake from President Biden about whether or not he's actually met with the chairman of the Federal Reserve.
Yeah.
We'll clear up some of that a little bit later. Equity futures on the S&P 500 right now, negative 0.25%, pulling back from all-time highs. In the bond market, the 10-year 371.87. The euro, Lisa, still a snooze. Euro dollar 111.62.
On one hand, you've got a Fed that's being more dovish than a lot of people think the economic data would warrant. On the other, why would anyone get bullish on the euro given what we're seeing with the auto manufacturers in Germany? And this interplay has left it snoozy.
Coming up this hour, less of a snooze, Chris Ferrone of Strategas with stocks coming off all-time highs. Mark McCormick of TD Securities with the yen dropping following the BOJ's decision. And Paul Donovan of UBS on the Fed's emergency cut without an emergency. We begin with our top story, the S&P 500 coming off its 39th record high this year as traders boost bets on a soft landing. Chris Ferrone of Strategas, a Baird company, writing, with the S&P looking ready to push to fresh highs, we're particularly interested whether the individual new high data can respond as robustly as it has for much of the last 24 months. Tech's leadership grip on this market is easing. Chris is with us for more. Chris, good morning to you, sir. It's good to kick off the programme with you. Thank you. Bond proxies, utility, staples, real estate, all lagged yesterday.
Yeah.
Is there a signal there?
I think when you look at Utes, staples, and REITs, let's embrace two of them. Let's push one aside. The staples have been weak all year. I mean, even when we had this defensive rotation over the last 3, 4, 5 months, staples really weren't a part of that to any great degree. This was about utilities, and this was about REITs. We continue to like both. I think there are overbought in the near term. I wouldn't be shocked if they consolidated or come back into us, as we saw over the last 24 hours. I think ultimately that will be viable. If you look at the utility versus energy spread, that got very, very extreme over the last couple of weeks. So some mean reversion there makes sense, I think, in light of the Fed. But ultimately, I would defer to Utes and REITs still as leadership within this market.
Do you need support from the bond market for that trade to work? Or is it sufficient just to say, I don't think bond yields will rise too much from here?
Well, I think yes and yes. I think you'll get both. Listen, it's not uncommon actually around first rate cuts to see yields initially bounce and then resume the trend lower. That's exactly what we saw in 95. First cut was July 95. Yields bounced for about 8 weeks, then resumed their slide lower. That's our base case here. I think unequivocally, and we've talked about this on the show before, the trend in yields is down, and we should be behaving as such. I think ultimately you'll get to 3, 3.25 on 10s. Call it 4% is big resistance. If you got them up there, I'm a buyer of every bond I can find.
This goes to Paul Donovan's point. You got the emergency rate cut without the emergency. It goes to the point that Michael Hartnett over at Bank of America is making, which it doesn't get much better than that for risk, so investors are forced to chase the rally. He's starting to worry about bubbles. Is there any feeling that you have that this is unsustainable, that there is this pressure, that you're seeing this sort of angst on the long end of the yield curve in gold that just highlights the inflation that could come back on the heels of such euphoria?
Well, if we're going to use the word unsustainable, what I thought was unsustainable was the two-year yield at 350 while Fed funds was 550. I mean, that's one of the largest gaps on record between twos and Fed funds. And we always say in our work, the only Fed speaker we care about, I know there's many Fed speakers today, the only Fed speaker we care about is the two-year yield. Every day it tells you exactly where the market rate is versus where the policy rate is. So market wanted 50, it got 50. I think the key now is, can yield stabilize? I'm in the camp ultimately that they don't, and they ultimately continue to work lower. But if you want to take some comfort that the Fed was proactive here to get policy back to where it needs to be, you would want to see rates stabilize here. So I think that's going to be the big tell over coming weeks. We talked about it off air. I'm shocked the BOE did not cut this week. And I think there's an example of where you will see short rates work lower because of it.
Which raises a question about the dollar and how it plays into this.
Yeah.
We've been talking about how, all things being equal, if the Fed were actually being aggressive, you should expect to see the dollar weakening quite considerably. What's the alternative? And if you don't get rate cuts by some of these central banks and you see real economic weakness, what's the incentive to actually go buy those currencies?
So, it's interesting. I find it curious that a lot of people think Fed rate cuts are dollar bearish. Actually, when you look at historically, it's the exact opposite. The dollar actually tends to rally as the Fed starts a rate cutting cycle. We'll see if that will be or will not be the case. I'm a chart reader. The charts look lower for dollar. That's where we are. I know dollar yen bouncing here. I'd be a seller 146, 147 of dollar yen. You broke a major trend line over the last couple months there. So I recognize the history around what dollar tends to do around rate cuts. I'm going to defer to the chart here.
Well, let's talk about the history and the why. Typically, they're cutting because bad things are happening.
Yeah.
Is that the big difference this time around?
It's funny. We spend a lot of time debating between non-recessionary rate cuts and recessionary rate cuts, but the irony is you really don't know, right? It's with hindsight, we only know what was a non-recessionary rate cut. But what I find particularly interesting, the 95 cuts, which are viewed as non-recessionary rate cuts, you only know that with hindsight. Now, if you look at the leadership coming out of the 95 cuts, I think intuitively you would have expected it to recatalyze cyclicality. It's not what happened. Coming out of the 95 cuts, staples outperformed, healthcare outperformed, tech really suffered. You put in about a 12-month relative performance top in tech, it underperformed the S&P by about 20% over the next year. So I find that interesting here, particularly as tech, the last couple months, in our work at least, has really begun to cede some of its strangle on the leadership.
So let's talk about leadership.
Yeah.
Large versus small caps, equal weight versus market weight, equal weight. How are you thinking about this?
I think ultimately for small to really kind of take the flag of leadership, you need an economic event separating kind of two different cycles. I'm not sure we've had that yet or are having that yet. But I do think equal weight versus cap weight continues to make sense. I mean, think about the last couple days. Equal weight S&P is at a high. Only one of the Mag 7 stocks are at a high. Meta's the only one. Not Google, not Amazon, not Microsoft, so on and so forth. So that's just a change in character. Equal weight S&P at a high, semis are not. Triple Qs are not. There's a change in character, I think, that speaks to the evolution of leadership we've seen over the last several months, and I want to lean in that direction.
What is it telling you, though, just based on history? And I say this because you talk about the changing nature, and I fold in what we got with FedEx, and I understand that you're a chart reader, but FedEx sent a pretty bearish signal. This is usually a macroeconomic bellwether, but some people are saying, well, this is something we've seen in the transport sector for a while. This is some underlying trend in the way that people ship. It's not necessarily this broader tell. Is that consistent with what the charts are saying?
Well, I'll make 2 points. First, on the evolution of tech leadership, I frankly wonder if when bonds were unownable, right, when bond yields were rising, you couldn't own bonds, I think a lot of these very big, large cap tech companies had bond-like characteristics. Now I wonder, as bonds are ownable, and we've been very bullish bonds, if it makes tech less attractive on a relative basis. So I'm curious if that's kind of playing into this seeding of leadership. On economic cyclicals, transports, FedEx, you mentioned, the transports have not been very good here, basically all year. They've been absent from the playing field, certainly from a leadership perspective. I would watch the rails. They have quietly started to perk up. I can't explain it yet, but I'm always intrigued when something behaves differently than I would expect. I would not expect rails or trucks at this point of the cycle to really start to turn. So I'm always intrigued when something behaves differently than I would expect. You're beginning to see that with the rails here.
FedEx is down 13% in the pre-market. We spent a lot of time talking about US markets. You mentioned the Bank of England. Let's finish on Europe. Let's cross the channel and go over to the continent. How bad are things in Europe and how much worse could they get?
I want to be long German bonds. I think they're bad. We always look at these measures of cyclicals versus counter-cyclicals. European cyclicals have collapsed versus counter-cyclicals, and the autos are part of that. The luxury stocks are a part of that. When we have seen that historically, you're kind of in the zip code or in the ballpark of a recession, and I think owning German bonds, yields lower, is how you play it.
Can I ask the tricky question?
Always.
Where does it leave the periphery?
I think, ironically, the periphery might be in better shape here. I know I'll always cede to the market's opinion over my own.
Of course.
Italian stocks act better than German stocks. That's a change from what we would expect in periods of economic weakness.
You're basically just being paid off from him. He was leading you there. He was basically, this is now Italy stronger than Germany, correct?
I just let the chance speak.
Oh, yeah, clearly. That's clearly what you're doing.
Chris, thank you. It's good to see you.
Always great to be here.
Chris Verone, Strategas, a bad company. Things have changed in Europe. The problem child of the continent is in Germany. It's not the periphery in the same way it was a decade ago.
Which is the reason why it's actually compelling to see exactly where the economic strength is going to come from and the political clout, not just in the ECB, but generally with the European Union, as that tide shifts quite considerably.
Equity futures this morning down about 0.2%. If you are just joining us, good morning to you all. Welcome to the program. Let's take the opportunity to get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Just some details on the German auto woes. Mercedes-Benz cut its forecast for the year on rapidly worsening China business. It said its top-end segment had particularly been affected, a blow to their premiumization strategy. Mercedes added that it doesn't expect Chinese demand for the higher-priced vehicles to recover this year. Now, meanwhile, German Economy Minister Robert Habeck this morning did float the idea of additional aid to the country's car makers. Nike shares are rallying 6.2% in the pre-market. The company ousted CEO John Donahoe and instead is bringing in longtime executive Elliott Hill out of retirement to try to return the struggling company to its glory days. Hill had joined Nike in 1988. He served as president of consumer and marketplace before retiring in 2020. Nike had slashed its revenue forecast in December, losing ground to competitors including Adidas, On, and Hoka. Bloomberg has learned that Johnson & Johnson is boosting its offer to settle baby powder lawsuits. Sources say the claimants could get a bigger payout and about $650 million in legal fees covered. That puts the settlement to more than $8.2 billion, up from its earlier offer of $6.5 billion. J&J maintains it's now withdrawn talc-based powders never caused cancer. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, the politics of a 50 basis point move.
I've never once spoken to the chairman of the Fed since I became president. It will also do enormous damage to our economy if that independence is ever lost.
Not quite true. That conversation up next.
this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
As we spend some time here on the broader presidential race,
Let's focus in on European politics.
Makes you wonder how politics might play out.
So we closed yesterday at all-time highs for the first time since July. Equity futures pulling back just 0.2% on the S&P. That's the equity picture in the bond market. 371.87 and just a little drift higher in yield. Steeper curves, Lisa, in the last few sessions.
A feeling that maybe on the margins, the bigger risk is that longer-term growth and inflation surprises to the upside, maybe. That said, it seems like this is a Federal Reserve that has the bond markets back, and a lot of people are just betting on that and asking questions later.
I thought of you this morning. I looked at gold. It's like gold record high. And thought of the conversation with Mark Zandi yesterday.
I got feedback on that.
Yeah, I'm sure you did. I'm going to keep talking about it. Gold all-time highs, steeper curves as well the last few days.
I am not alone. I just want to say there are other people who
You've got company.
Gold, and there are people who are looking at that as a potential proxy. Michael Hartnett over at Bank of America mentioning gold and bonds as a potential way to hedge extra inflation risks. It's a thing.
It's a clean move at 2,600. A break of that level. We're up 0.8% on the session. Under surveillance this morning, the politics of a 50 basis point move.
Unlike my predecessor, I respect the Federal Reserve's independence as they pursued its mandate to bring inflation down. That independence has served the country well. By the way, I've never once spoken to the chairman of the Fed since I became president. Will also do enormous damage to our economy if that independence is ever lost.
So here's the latest. President Biden saying the Fed's half-point rate cut is an important signal that inflation has eased, before mistakenly claiming he's never met or spoken to the Fed chair, which was pretty easy to clean up, given that's happened a few times over the last few years, hasn't it?
On camera. It's not as though it's something subtle. Yeah, in May 2022, Bloomberg reported yet another meeting, and that it was the third in-person session with Jay Powell. So since then, maybe, but yes, this is something that is verifiable.
We'll park that story and we'll get another view. The former President Donald Trump making claims of his own, saying, quote, it's a political move to try and keep somebody in office, but it's not going to work because the inflation story has been so bad. Joe Matthew of Bloomberg joins us now from Washington, D.C. for more. Joe, welcome to the program and good morning to you, sir. Walk us through how the politics of this has all played out in the last few days.
well, I'll tell you, it's pretty interesting here that Donald Trump said more than just that. He said something that Joe Biden would not say yesterday. In this interview that he conducted, talking about the Fed and interest rates, he said, criticizing they're too early before they're too late, but he said inflation is already done. I thought that was pretty important. Just a couple of hours after Joe Biden refused to take the victory lap in that speech, in which he said he never met with Jay Powell. He said this is not a moment to declare victory, but to declare progress. We're getting closer. And when we have such little time between now and the election, I have to admit, I'm surprised there isn't a little bit more of a celebration of this moment of a new regime. But look, not everybody's watching Bloomberg and dialed into the markets when it comes to undecided voters here. The fact of the matter is, you know, if you don't remember where you were on May 31st, 2022, and it was in the Oval Office, then we may need to talk, John.
There is this question, Joe, aside from that, which is a clearly verifiable mistake that Joe Biden was talking about. There's a bigger question here about the ramifications for a Federal Reserve making a big move ahead of an election at a time where they already are being highly politicized. Are you expecting this to actually be a point of campaigning for Donald Trump going forward, or is this something that's passed and everyone can move on?
Well, I think it's a conversation for the market more than anything for those of us here in Washington who talk about this stuff. Most people are celebrating the fact that mortgage rates are going down. I mean, let's be honest about this. When you talk about the impact on the consumer, the psychological effect of seeing interest rates come down, probably not considered a bad thing. And maybe that's why Donald Trump doesn't love the look here. But look, the fact of the matter is Kamala Harris is talking about housing. She got together with Oprah last night to talk about some of these issues that are really important to a lot of voters out here, and this is right down the middle. Mortgage rates are coming down. She's promising incentives in the housing market, and it comes together, coalesces into a pretty decent message for the candidate here. Whether Fed independence is a kitchen table issue in this country, I kind of doubt it. Donald Trump used to tweet at Jay Powell all the time. I don't know that that would be any different now. He says he wants to play a direct role in setting interest rates. Joe Biden obviously does not. But if that's something at the kitchen table that's being discussed, I tend to doubt it.
It is at mine. I just want to point that out, that we have robust debates at the kitchen table about Federal Reserve policy. There is this question going forward about how the candidates are going to potentially support the down ballot candidates, in particular in the House, because usually the way that the president goes, so to the House. At this point, what has that effort been like, certainly for Donald Trump and Kamala Harris?
Well, it's interesting. You know, we're in the midst of this debate right now over government funding, and I think a lot of lawmakers in the House are worried that this could be a very bad look. I'll remind everybody that we are 11 days away from a potential government shutdown, and there's no deal in sight yet. The Speaker of the House says he'll put a clean CR on the floor. That'll be 3 months in duration. That could work. But there's the risk of sleepwalking into a shutdown, and that tends to not look great for the party in the majority. We have to remind ourselves of how thin that majority is in the House of Representatives, and Donald Trump is not making the Speaker's job a lot better. But the fact is, fundraising has been a big move. The DCCC reporting another record just in the last 24 hours here, thanks to the strength at the top of the ticket. That simply was not happening when Joe Biden was at the top of the ticket, and this is looking pretty good for Democrats right now. The problem is the Senate, really. Democrats stand to lose their majority in the Senate based on a lot of analysis that we are looking at when you consider states like Montana, like Ohio, even the state of Maryland, raising a lot of questions right now about what the balance of power could look like. If Democrats were to take the House, they may well lose the Senate.
Joe, we get lucky this morning. We've got Anne-Marie in North Carolina. We'll be talking about this with you as well in the next hour. Can you walk us through the scandal that's evolving in North Carolina?
You know, look, this is salacious stuff. There's a lot that I cannot say that was apparently written on social media by the Republican candidate here, Mark Robinson, for governor in North Carolina. And just to back up a little bit, this was one of the most closely watched and expensive races on the gubernatorial level in the country here. Apparently, he was spending a lot of time on social media sites. This is a CNN story and not necessarily verified here by Bloomberg, in which he referred to himself as a perv and a black Nazi. He was trafficking pornography websites. He has denied all of this, saying that he is not dropping out of the race. But the next 24 hours ought to be interesting, and I'll be deeply curious to hear what the governor himself has to say when he talks to Anne-Marie later on.
We'll have a bigger conversation on this in the next hour. Looking forward to it. Joe Matthew. Joe, thank you. Of course, you can see Joe Matthew on Balance of Power with Katie Lyons every day at 1 and 5 p.m. Eastern Time.
Yeah, that was sort of where I was heading with how the candidates are handling these down ballot races, because Donald Trump has campaigned with the lieutenant governor, who is currently being accused of some of these salacious comments. And you just wonder how much they either continue the sort of defiance or whether there is some sort of distancing, and how that all works, given everyone has their issues, but sometimes it comes to the fore a little bit more than others.
Did that very diplomatically there. We'll catch up with Anne-Marie in about 60 minutes from now. Look out for that conversation. I don't think either of us really want to talk about this in any great detail. Equity futures right now on the S&P 500, negative by 0.2%. It's a big move in dollar-yen. The yen is weaker, the dollar is stronger on that currency pair. Coming up next, we'll catch up with Mark McCormick of TD as the BOJ says it's in no rush to hike. That conversation up next. From New York, this is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The equity market just a little bit softer. On the S&P, we're down 0.2%. On the Nasdaq 100, big day of gains in yesterday's session. We're down a third there. On the Russell, the small caps off by a third as well. After closing at all-time highs on the S&P 500 for the first time since July. Lisa, just a little bit of a pullback this Friday morning.
You had the right line of questioning with Chris Farrow on this question of, can you see this leadership in small caps, equal weight, all the 493 less loved stocks continue, given the Fed support of this market in the sense of a soft landing? The answer probably, it seems like, is yes. I thought it was notable that flows into U.S. equity funds were the third biggest going back to 2022 in the past week. The message was clear, and the message was received by a lot of investors.
So I think the bond market question, the most important one there, speaks to the most important question, the equity market leadership. I think it's interesting that bond proxies yesterday underperformed. The likes of utilities, at the same time you saw the bond market just a little bit lower, yields higher, curves steeper. Whether that's a continuation of things for days to come, of course, if I knew the answer to that, I wouldn't be here. But if you listen to the likes of Subhadra Rajappa of SocGen, who are making the argument it's difficult to see bonds rallying much more from here, their bias is for steeper curves, for high yields. If Subhadra's right, that trade with the bond proxies has worked so well over the last few months, the likes of utilities, gets a little bit more challenging.
You'd still be here. Come on.
For 60 minutes. I'm not sure I'd come for 3 hours, and I don't think I'd be here for the first hour.
All right, fair point. Look, it is this sort of question of, is this just a pause, or is this the beginning of a change in the sort of downward in yields all across the curve kind of trend? And that really, I guess, we cannot answer because we are here for all 3 hours starting at 6 a.m. That's all I'm going to say.
Starting at 3. You know, if you're rich enough not to wake up at 3 in the morning, then I guess you're not waking up at 3 in the morning, right?
Unless you're
waking up at like 5 because you love this so much.
All right. But this is, to me, the key question of whether you can see a continuation of the rally in bonds or whether we can actually, see potentially a shift a little bit.
Yields starting to climb on treasuries. So let's push that through the FX market. Dollar yen breaking out back towards 144. So we're at 143.97 right now. That currency pair up by 0.9%. We've dealt with the dollar side of this trade. Let's deal with the yen side of things. The BOJ, not exactly endorsing a near-term rate hike, if you listen to the words of Governor Wader overnight.
Yeah, and you saw Oxford Economics come out and push back their forecast for when they're going to next hike their rates in December versus October. This comes even though we got some data overnight that really showed inflation is picking back up, but it doesn't look like they're going to see inflation fall back down to that 2% target in the near future. A key question here, and I keep going back to this, the political aspect of this, the fact that there is some disagreement in the parliament there about how to treat the Bank of Japan and what the Bank of Japan should do is the reason why Oxford Economics and a couple others have raised this as the prospect for why they will wait until December, sort of remain out of the crosshairs of some of the political discussions. You're hearing this more. And this, to me, is what happens when you have a confusion between the interplay between fiscal and monetary. How can they not deal with the politics of the moment? How can they not recognize what it means to be independent at a time where increasingly that has been called into question?
We're on course, on track for the worst week for the Japanese yen, going all the way back to April. Dollar yen right now, 143.97. Under surveillance this morning, some top stories for you. Israel carrying out extensive airstrikes across southern Lebanon, saying it hit 100 sites where the Iran-backed militant group, Hezbollah, could launch attacks in the immediate future. A series of attacks, a very different character through the week so far.
Yeah, and a lot of questions now about how much this escalates, or potentially, as Anne-Marie was making the point, de-escalates potentially the situation, how much this calls into question the strength of Hezbollah, one of the most powerful proxies of the Iranian-backed axis. There's also another question, and this was coming out of the U.S. congressional members. If Israel can do this, China can do this too. Long, opaque supply chains leave gaps that can too easily be exploited, and we need a strategy for closing them in collaboration with our allies. How much do we have a renewed focus on supply chains, security, this idea of tracking things that much more closely? That, to me, arguably is the most interesting aspect to come out of this.
It's exactly the question you raised yesterday. I think it's a really, really important one. Given our experience with the likes of TikTok and things like that, we don't exactly have the greatest track record of dealing with these issues quickly and efficiently, do we?
And if you don't, how much does this really leave you open for a Trojan horse, as the New York Times described the attack that Israel had on Hezbollah in Lebanon? How much does this really leave you vulnerable? And I think that, to me, is, you know, the reason why I'm looking at some of the blockchain solutions to supply chains, to some of the policies and how you sort of track things. But otherwise, how do you ensure other people don't do this too?
I know we've been somewhat desensitized given the summer that we've had around the world, but some shocking pictures coming out of that part of the world over the last week.
Shocking. The idea that you could have simultaneously 2,700 pagers exploding across a country, targeting specific members of Hezbollah, which is recognized as a terrorist organization by the United States, and then the next day, walkie-talkies and other things. I mean, it's really unheard of, and you have to imagine the behind-the-scenes planning for years that went into actually having this happen.
Still trying to figure out if this leads to further escalation or ultimately de-escalation. We'll park that story. I want to talk about two single names, two big stock stories in this country. The first one is FedEx. Lisa mentioned this about 30 minutes ago. Slumping after reporting worse than expected quarterly profit. The stock is down 14%. The company expecting business to slow in the year ahead after the CEO called it a challenging quarter with customers trading down to cheaper shipping options. We've seen this across a few companies.
Yeah, and this used to be a macroeconomic signal. Where FedEx went, so too went the economy. Seems like there's a lot more questions this time around, especially because there is more competition, Amazon, but you also have the situation where, you know, we've seen such a boost from all of the shipping. Mostly, you know, there is a transformation in the way people are getting their packages. Doesn't necessarily speak to what you're expecting for the broader economy.
That stock is a struggle, let's put it that way. A better stock story, stock is climbing this morning, it's Nike, bringing longtime executive Elliott Hill out of retirement in a bid to revive the struggling athletic brand. Hill's set to take over the role from the current CEO, John Donahoe, on October 14. The stock is up by more than 6%. Now, whenever you see stories like this, I'm always trying to figure out, is the stock up because the other guy left or because of this new guy coming in? Which one is it?
Yes, I think that right now it just changed, because right now you can see that they've lost their competitive edge, and people have talked about that extensively. On was very excited about their terrain into their fields that was previously Nike's. How do they get their cool back? How do they get their running prowess back? How do they get that crowd that they've lost to new upstarts at a time where they're bringing back someone who's 60 years old, who was previously retired, to run the ship? It really raises this question. We've seen this in a sort of significant pace in terms of CEOs that are being pushed out of companies in order to revive some of the past business strategies.
To take the company back to the roots, I think you raised two very distinct, separate, important questions. Getting the call back and finding out what on earth went wrong with running. How you can walk around, go around any open space in New York City, go around Manhattan, go to Central Park, and look at all the runners going through the city in the middle of, say, a Saturday morning or a Sunday morning, and just look at the sneakers. It's not Nike anymore. How did they miss this explosion in running over the last 2 years? How are they not part of this at all?
If I knew, I'd have to kill you. No, truly though, actually, I am a runner. I have a lot of friends who are runners and have belonged to running clubs, etc. And they say at some of the demos, you see On, you see Hoka, you don't see Nike. And that, to me, is actually a really big tell. If you're not targeting some of these clubs that are your target demographic and you're going after a more pop culture audience, that's how you do it.
That's how you lose an audience and lose them quickly, and that's the effort now. You've got to try and turn that around. That's the latest on Nike. The stock is up this morning by something like 5 or 6 percentage points in early trading. Elsewhere, the yen is falling after the BOJ's decision to hold rates steady. Governor Ueda indicating the central bank isn't in a hurry to raise interest rates and saying upside risk to inflation are easing. Mark McCormick at TD Securities joins us now for more. Mark, we'd love your first reaction to the decision overnight, so let's start there.
Sure, I think it's pretty standard boilerplate stuff from central bankers. He's trying to tell us that they don't want to move. They're not going to move anytime soon. But really, again, the key theme for every single central bank, particularly the Fed, the BOJ, ECB, everyone, they're all data dependent. And the data in Japan is strong enough, especially on the inflation side, to say they have to keep normalizing policy. So he's not leaning into October. October to us is extremely live. We still think they're going to hike again this year, most likely in December. But again, this is just kind of standard boilerplate. This is where we think things are at the moment. We're not really telling you what's happening in the future. And again, it just relies heavily on data dependence.
How data dependent is the ECB?
I think they're extremely data dependent. I think as we talked last time, one of the key things here is that we're probably at peak divergence between the Fed and every other central bank. I wouldn't say the ECB is behind the curve. The ECB has been dealing with like stickier inflation on the service side. But if you think about what's really going to be a big driver for the ECB and the European economy moving forward, it's links to China. And China's exporting deflation. China is moving at a much worse pace than what we see from other countries. And that is much strongly more connected to the Eurozone economy than in the US. So I'd say in terms of the data dependence here, it's going to be what happens next, which the next shoe to drop. And I think it's what we're going to see is much weaker European data that's going to kickstart potentially a little bit more activity from the ECB.
We're seeing that already with Mercedes-Benz and some of the sympathy moves you're seeing from the other auto manufacturers. That's data that the ECB can use in terms of what the forward look is in terms of demand from China and the read-through to the economy. How much do you expect even further weakening in the euro? I know you've been aggressive actually pushing back against this idea that the dollar was going to be incredibly weak. How much are you leaning into that, seeing things like what we saw overnight with some of the European auto manufacturers?
We're leaning into it now. I think there's a couple considerations when you think about FX. Like one thing that people care about trading-wise in the very short term is positioning. So we run our own positioning models. Our positioning models are telling us that the market is max short the dollar pretty much across 90% of the currencies that we track and we look at. Euro is one of them. The other thing is, again, this narrow focus on the U.S. only. We've gotten the Fed. They front-loaded. They went 50. But again, they argued for data dependence, and they're talking about the neutral rate being higher now than it was in the past. The next thing is really what happens outside the U.S. The PMIs are coming up. So when we start looking at what's happening, the leading indicators that we track that are consensus revision, data trends, data surprises, the little secret here is that the U.S. data is stabilizing and European and Chinese data is getting worse. So I still think this is the interesting part is the macro story is not aligned with what we're seeing happen in the price action. And then when we look at positioning, we look at other indicators that are great for kind of executing the idea. All those things are leaning in to say that we should be fading the euro right now. And again, what we should be doing is we should be buying volatility. We should be defensive, and we should expect more surprises rather than things going the way that need to be perfectly done.
This is fascinating, especially because a positioning type of move, really a lot of people are saying was what was behind the carry trade unwind that we saw with the yen and how that trickled out into other asset classes. Are you saying that we could see something akin to that, based not necessarily on Japan, but on Europe as some of this, the PMIs and other macroeconomic data come in weaker than expected?
Well, I think what it does is it creates asymmetric risk, and that's what everyone looks for a tactical trading opportunity is, you know, the market is now leaning in one direction. It is short the U.S. dollar, it's long U.S. rates, and it's basically all in on the, you know, the slowdown. Like, again, if there's definitely a disconnect. If you look at the credit market and the equity market, that's telling us there's a soft landing. If you look at the bond market, it's pricing in 70, 80% chance of recession. If you look at, again, just very high frequency data, it's on Bloomberg, the Atlanta Fed GDP now is at 3%. And the Atlanta Fed sticky core inflation numbers at 4.1%. So it's not clear at all that the U.S. is in a recession. What's very clear is the Fed's trying to get to neutral. It's just it doesn't know where neutral is. So when we think about the catalyst, again, I think the market's kind of like, all right, we got the Fed, they cut 50, we digested it, the election's still coming, but hey, look, where is the next trade? And I think this is what happens with positioning, is this trade is kind of tired. The pendulum swung too much. And once we start getting news in the other direction that doesn't really confirm this bias anymore, then the market just swings in the opposite direction. I feel like we're on one of those. That's what when we see positioning this lopsided, you create the asymmetries where you don't need a strong news event, but just a series of light changes in the market narrative pushes everything in the other direction.
Hey, Mark, you're an FX guy, so you probably dabble in gold. I hope you do, so let's talk about it. How does gold and an all-time high over the last few days line up with what you're saying?
Gold it's I wouldn't say it's simple, but it's interesting. There are flow dynamics that come through gold, which is just happening behind the scenes. Again, if you are essentially an emerging market trading with China and you're trying to find ways to, move oil around the world, you can basically settle these trades in gold, which is, there's a strong demand for gold. You essentially could argue Bitcoin is a similar concept. I think the other thing, again, is the bond market's pricing in an extreme move by the Fed. So it's pricing in a low real interest rate. And so from a flow perspective, that gold seems to be in demand across the board. And also from a macro perspective, the big moves we saw in the Fed pricing is just going to boost the value of gold. So I think it's really a simple thing. Real rates have moved lower in the U.S. and gold tends to benefit from that.
All-time highs again this morning. Mark, thank you, sir. Mark McCormick at TD. Bramo, just for you. All-time highs on gold.
Thank you. He didn't say inflation, which I thought was interesting. He was saying, very generalities. Typically this is what happens. It's because it's an inflation hedge, and that's what we heard Michael Hartnett come out with.
I think that Mark has done a brilliant job over the last month or so of really highlighting how difficult it will be to close global growth differentials at a time when China is really not performing and Europe's struggling.
This is a reason why it's not necessarily intuitive that the dollar will weaken completely in tandem with a more aggressive Fed, because you start to look at some of those growth differentials and the monetary policy response mechanism, it gets really confusing. But again, logic comes to die in this market, and so you can come up with a really good narrative of how it's going to be different this time, et cetera, and it isn't.
You've said that a few times. Jay Poloski, TPW, with us in about 15 minutes' time. Let me give you a teaser, an appetizer. The Fed's move is likely to force even the die-hard recessionistas to give up that point of view. All this reinforces and supports our global macro blue sky outlook for 23 to 2027.
Oh, Jay, you might be insufferably happy today, but it will be warranted. He is getting exactly what he expected to happen, and it's just basically confirmed and gone his way.
Jay's 15 minutes away. Let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Skechers shares delivered their worst daily performance since February. It warned that China sales would be under pressure for the rest of the year. CEO John Vandemore says the back half of the year is going to be more disappointing than expected. Concerns have been growing among global retailers about weakening demand from Chinese consumers. And Berkshire Hathaway has resumed selling shares of Bank of America this week. The company unloaded about $900 million worth of shares. That means its ownership is dropping closer to that 10% mark, under which it no longer has to report holdings. Now Warren Buffett's remaining stake, $34 billion, is pure profit. Apple's iPhone 16 hit stores today. The new phone is available in almost 60 countries. That includes the US, China, India, Australia, and South Korea. But the devices won't come with Apple Intelligence installed. The highly anticipated AI software that the company has been touting since June will have to be downloaded over time as it becomes available in the coming weeks and months. The new low-end AirPods and refreshed Apple Watches will also be available today. That's your brief, John.
Danny, thank you. I was surprised to see at about 4 a.m. this morning a line starting to form outside of the Fifth Avenue store. I'm surprised people still do that. Why do they still do that?
What, form a line?
To get the new iPhone.
It's exciting. You get in.
What's exciting about it?
You can go on the gram.
Just go to...
Take a picture of yourself with the new phone.
T-Mobile, AT&T,
no,
and just...
No, be part of the line. Camp out.
I don't
you can
get
see
it.
me there.
I never understood it before. I really don't understand it now. Up next on the program, an emergency cut for a healthy economy.
The Fed did what it needed to do. It got us back to full employment with inflation effectively at target. Not only are we, at target, we could be beyond target. So no, I'm not worried about inflation.
That conversation just around the corner. This is Bloomberg.
artificial intelligence. Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Bringing together
this is Bloomberg Technology.
One organization.
This is the Asia
It's
Trade.
really hard to do. And if you're working on a problem that may be modestly successful, it's kind of easy to get the first few people to join. You can give them a lot of equity, but then it gets really hard. Why is employee 20 going to join? Why does this matter to the world? Why should someone work on your startup versus any of the other things they could do? And picking something that matters if you're successful is a great way to do that. And so I think it's really important to think about when you're starting the company, how is this going to evolve into a vision that a lot of people want to help with, that a lot of people want to be associated with? Because I think getting talent and getting mind share is really hard in the current environment. And people are interested in startups that matter. Another thing that we've noticed among our best founders again and again and again is that they have a confident and definite view of the future. They may be wrong, and so we say it's good to be confident and flexible, but this idea that you are confident and definite, this is what I think is going to happen, or this is what is going to happen, and being relatively sure of that, having courage of your convictions, being a clear leader, saying we're going to do this, and that's why, even in the face of a lot of doubt, that seems to really correlate with success. And this comes back to having an ambitious vision, but the entire startup ecosystem is best set up to support companies that have a low chance of success, but are huge if they work. And I think going for something that is huge if it works will attract the best people. I'm not going to talk too much about the team. There are a lot of obvious things I could say that have been said many times by many people about, you need smart people who want to work really hard and who communicate well. These are all really true. But I'd like to mention a few non-obvious things that we've noticed that we don't hear people say as much about the team you need to assemble. Vinod Khosla says that the team you build is the company you build, and I really think that's true. I've still met only a handful of founders, I think, that spend enough time on recruiting, like Mark Zuckerberg is famously one of them. But building a great team, I think other than picking the right market and building a great product is the most important thing you do. All founders go through a transition, all successful founders, where you switch from building a product to building a company, and building a company really is about the team. So you need optimists. The whole world will be telling you why you're going to fail as a startup. If you don't have that internal fire of belief, if you don't have people who say, you know what, we are going to do this, and it doesn't matter what the haters say, we're going to figure this out. And there is, this problem, it must be solvable. If you don't have the spirit of optimism on the team, it's very hard to succeed when the world continues to punch you in the face. You need at least some idea generators. There are a handful of people in any company that has gone on to be really successful that I've been able to work with who are just really good at coming up with lots of ideas. You don't want too many of these people because that's more ideas than a company can follow through on. But having some people within a company that are just constantly throwing out new ideas, most of which will be bad, turns out to be super important to have on the team.
By cutting rates, we may actually get an accelerated decline in inflation because it will help reduce OER over time.